Hmm. Well, the market was looking bearish for like an hour. The Russell was down like 3%. Nasdaq was down over 2%. Same with the S&P. I don't remember how much the Dow was down, like 1,200 points. I don't know what that is percentage wise, but it bounced back. You know, in bear markets, you tend to get rallies like this, and then it'll sell off again during the end of the day. So if this ends up selling off, potentially the market's bearish, but I don't know. It's still up for debate, I think. I think it's still up for debate. I think it's still up for debate. Ugh. I feel sick today. I don't know what's wrong. I feel hella weird. What's up, Ruben? How you doing, bro? Working like always. Good man, good man. Love to hear it, bro. Love to hear it. On the grind, baby. What the hell? Matt Romano, what's up, bro? How you doing? You got any updates on your condition? Hopefully everything's okay. Didn't point anything. Huh. Well, that sucks. That's weird. Gotta get an ultrasound on my heart and see a cardiologist. Damn, that's crazy, bro. That's fucking insane. Well, I hope everything's good, bro. Hopefully if it's not anything, maybe it's just like something you can solve with like a healthy lifestyle, maybe. I don't know. That's crazy, bro. But glad you're doing good. Besides that, I suppose. What's up, Kev? How you doing, bro? Yeah, everything in the market except well, I guess the Nasdaq's been kind of bearish. But yeah, everything in the market hit a bear trend today, but immediately bounced, so kind of interesting. Kind of interesting. Dollar spiked. Very weird market right now. Oil is ripping. Man, man, that oil trade, bro. That oil trade is crazy. Market looks fine to me, though. I don't know. It was looking bloody this morning for sure. Market was looking pretty bloody this morning, but looks fine now at this point. Obviously, it's pretty volatile, so we'll see what happens. We'll see what happens. I just wanted to look at a chart real quick, see what those sticks look like. Change your name to earnings call, Corey? Nah. I just like listening to the earnings calls. Some of them. The Riot one was pretty interesting. But I would never invest in most of these businesses, so it's like, it's more just for education than anything. And for views, obviously. I know you've been away for a while, but there's been times where there's like hundreds of people here. So it's an easy way to get views. That's mostly why I do it, but it's also educational, learning about other businesses and stuff. Yeah, I'm good, bro. Just kind of feel sick today. I don't know why. But other than that, can't complain. Let's see, what else you got? Oh yeah, you had Target earnings, huh? Let's check out Target earnings. Oh, they don't have the 10K. That sucks. That's okay. We can check out the press release, I guess. Damn. Target's insane. What is their stock price at? What is crypto doing? But oh yeah, crypto's actually up. Did crypto sell off today, or is it just the stock market? Looks like it was just the stock market that sold off today. Crypto might have been down for a little bit, but not really. I don't think you're going to be getting any 13Fs for a while. Yeah, nothing there. You think eBay could be a target for GME? Maybe, but I just don't think eBay is like a competitor to like Amazon and Walmart. So, you know, if GameStop, eBay is not a good company. Like eBay's good, it makes profit. You know, we can look at their balance sheet, like it's okay. But eBay is not a company that could become a several $100 billion company. It's just not. The only thing that really makes sense is Target, because Target is a direct competitor to Amazon and Walmart. Target already makes multiple billions of dollars, and it's also not doing that well, and it's still making multiple hundreds of billions of, or not hundreds of billions of dollars, but multiple billions of dollars per year in net income. So, you know, you get someone like Ryan Cohen who understands the retail space and, you know, turn GameStop from losing few hundred million to profitable 100 million. What could he turn something like Target into, you know, that's already making a few billion a year? You know, he could turn Target into something that makes 10, 20, 30 billion dollars a year, or maybe even more. So like, I get why people are saying eBay, but when Ryan Cohen says that he's going to turn GameStop into a several $100 billion company, like, eBay is not that. eBay will probably never be a several $100 billion company. eBay's been around for fucking ever, and it's only sitting at 17 billion. Like, eBay's been around for like 20 years or some shit like that. And they also don't make that much. Oh, I guess they made 2 billion. All right, eBay makes way more than I thought they did. So maybe eBay could. Maybe eBay could be it. I didn't think they made this much. I thought they made a lot less. So maybe it could be eBay, because eBay is a lot, from an asset perspective, it's a lot less than Target. So maybe it could be eBay. Whoa, why is my computer frozen? What's going on? What is going on here? I mean, let's see what Target made. I mean, Target had 30 billion in net sales. What's eBay's net sales? 11 billion. So Target's just such a better, like, by far a better company. And, you know, Ryan Cohen's experience is in retail. Like, eBay's online retail, but it's not retail. Yeah. Target made 3.7 billion. Granted, last year they made 4 billion, so So like Target is, declining. eBay is not really growing. 2023 it was 2.7 billion they made, then 24 only 1.97 billion. So they made a little bit more this year. But eBay is not really growing either. So I guess it could be either one realistically. I think eBay would be cheaper to acquire for sure. But I just don't see how eBay could be like a direct competitor to something like Walmart. I just don't see how eBay could become a several $100 billion company either. Target, I can see it. It makes so much more sense. But I guess it's still to be determined. Crypto trending down till at least July, I reckon. I mean, it seems like it's leveling out, but this is what happened at 85K. It sat and sat flat for like 2 months. It's only been a month so far that you've been at 60, 70. eBay used to seem good to sell on. I don't know why, but it seems trash now. It's just a lot of fees, and shipping is really expensive now. Like when I first started selling on eBay, to sell like a small item under a pound was like $3. Now it's like over $5. So shipping is expensive. There's fees have increased. So like you can still make money on eBay, but you just got to be a lot more selective with what you're selling or what you're buying to sell, I suppose. I just keep seeing people say eBay. Yeah, of course. Everyone's just going to repeat the popular idea. Nobody, I mean, I've seen people talk about Target too, but everyone thinks it's eBay for some reason. How Ryan Cohen explained it, it seems like Target suits it more. Yeah, and I mean, you could buy Target, close like every GameStop store basically, and you could put GameStop stores inside Target. So like, you would still have a brick and mortar space for GameStop, but it would be like a store within a store, So like Target just makes so much more sense. It would be more like of an experience than anything. But at the same time, eBay is an online only business. Potentially that's kind of where maybe that's where they want to go. But Target also has an online business, so it's like I just don't know why you would buy an online only business either. Like retail obviously works. Walmart is one of the fastest, fastest growing companies in the world. Like brick and mortar retail fucking crushes. So, it wouldn't really make sense to go purely online, I don't think. I really don't. But, we'll see. We'll see, obviously. Yeah. Holy shit. Target did 104 billion in net sales last year. Like, that's insane, bro. That's insane. What did eBay do in net sales? What did I say? For the full year? Yeah, for the full year, eBay only did 11 billion in sales. So, like, how are you going to turn eBay into a several $100 billion company? Target 100 billion in sales in a year? Like, that makes a lot more sense, in my opinion. Someone like Ryan Cohen could turn this into a company that's making like 10, 20 billion dollars a year profit, most likely. Eliminate all the debt, so every dollar they make is profit. Like, they could do a lot more with this, I feel like. Would make sense closing all the stores, but Retail Co. and whoops, we got more stores than ever. I don't know, just thinking out loud. I mean, it wouldn't make sense to close all stores, though. how would that make sense? A lot of people have that opinion, but that doesn't make any sense. Brick and mortar is profitable. Look at Walmart. We can look at Walmart's balance sheet too. Walmart's literally one of the fastest growing companies in the world. Probably top 5, maybe most likely top 10 if we're being more realistic, but and the stock reflects that as well. Look at Walmart's stock. It only goes up. Walmart stock does not go down. Like, I mean, I think it's down right now. Yeah, it's down a little bit, but like, look at the overall trend of Walmart stock. This thing does not go down. And you know, it's reflecting how good this business is. You know, maybe there will be a time when Walmart goes down, of course, if the market crashes or something, but like, Walmart's one of the greatest companies ever. Let's see. They don't have their new 10K. Have they even posted yet? Is this their earnings? How come they haven't posted their 10K? What the hell? Yeah, their revenue's growing, income's growing, income growing faster at 10.8%. E-commerce sales up 24%. Like, company announces 30 billion share repurchase. Like, Walmart is insane, bro. Walmart is actually insane. And Walmart's doing the same sales as Target, basically. Oh, no. Holy shit. Walmart did 129 billion in one quarter. Holy shit. 483 billion in a year. That's fucking insane, dude. That's actually insane. And that's just the US. They have the international too. The international did 130 billion. That's wild. And Sam's Club did 93 billion. So in total, that's like 800 billion in sales. Like, that's insane, dude. That's actually insane. Yes, 700 billion in sales. That's fucking crazy, dude. That's actually insane. What are the margins? I'm trying to look for it. But I don't think that really matters. I mean, even if you make 1% margins, you're still making like $7 billion a year. So I don't think it really matters. Consolidated net income, 22 billion they made in profit last year. 22 billion. Like, that's fucking crazy, dude. That's actually insane. So I don't know what the margins of that would be. What is that, like 700 billion? Oh wait, I did it wrong. 22 billion divided by 700 billion. That's a 3% margin. But it'd be a little different, I think, if Walmart wasn't growing, but it's not only is it absolutely crushing, it's also growing still. And this isn't like the I like the 10K more. It's a lot easier to read. But shareholder equity, 100 billion. Walmart's the stock's only at $1 trillion. So, like, you know, the stock's probably relatively a little overvalued, of course. But, I mean, it makes sense why it is. You know, it's still growing. Last year they made 20 billion. This year they made 22 billion. Their assets are growing. Stockholder equity is growing. Net sales are growing, like everything's growing, so it makes sense why the stock's overvalued. And it just, I don't know. Target's the only thing that would be able to compete with this. I don't see how eBay would be able to compete with this. I don't see how you could turn eBay into a several $100 billion company. I just don't see it. But, you know. Eventually we'll find out, maybe. Who knows? Maybe it's all just a troll. Maybe it's all just a troll. It's probably not. You know, it's probably not, but maybe. Maybe. Damn, a lot of insider buying. What the hell? Ooh, the CEO of SoFi bought 1 million shares. Or $1 million worth of shares. 56,000 shares. That's, SoFi's great. I think SoFi might be fairly valued at this point. It's sold off a lot. $24 billion. Oh, never mind. I don't think they have that much assets, but SoFi crushes. So I can't remember exactly what SoFi. It's been a while since I've looked at it. They made 481 million last year. Yeah, 50 billion in assets. Where's their stockholder equity? A lot of liabilities, though. So they probably got like 10-ish billion of stockholder equity. Not bad, not bad. Not bad. But if the CEO's buying, you know, that's always a good sign, I suppose. Ooh, an insider buy on Marqeta? I haven't looked at Marqeta in a while. That's an okay company. It's smaller. Oh, wow. It's up 7% today. The stock's not doing that well, but from what I remember, the company's not terrible. It's been a while since I've looked at that, actually. I think they reported, yep, a few days ago. Lost 13 million. It's not bad, though. 1.5 billion assets. What was the stock value on that? Oh, yeah, that's not bad at all. A little overvalued, especially, you know, if it's going to continue to lose money. But it did gain 7% today, so it was probably potentially fairly valued a couple days ago. Someone buys billion in Pinterest. If that's not on like a 13F or something, I don't know. I don't know about that. I don't know about that. That's got to be on a 13F. A billion in Pinterest, that'd be like most the float probably. Yeah, I don't think that's even possible. I don't know. How much is this? A billion divided by 19.2. That'd be 52 million shares. So they would be a 10% owner. So if they filed a 13F, and then yeah, that probably did happen. But if that's just like something you read, I don't know about that. I don't know. We can look though. Yeah, there's no 13F or anything here. Oh wait, right here. Oh wait. No. I don't know if that's real or not, bro. I don't know where you read that, but I don't think that's real. You'd have a not a 13F, a 13 whatever, 13G or 13D, because they would definitely be over a 5% owner. And also you can go into Whale Wisdom, and you can look at the top. Well, if it just happened today, maybe this wouldn't be updated, but something like that would be on the SEC filings. So I don't know where you got that from, but I don't think that's real. Yeah, let's see. BlackRock is the only one that has that many shares. And Vanguard. Vanguard and BlackRock are the only ones that have over $1 billion. So I don't know, maybe they're lagging on the 13F, maybe, but I don't know if that's real. I don't know if that's real, my friend. How much money does BlackRock have? All of it. They have all the money. All the money. If Crowd moves more than 5% either way, it would be surprising. Maybe. I mean, I don't know what the market's pricing in, so it's probably pricing in somewhere around that. Do you know how to do that? It's pretty easy. I can show you real quick if you don't know how to do it. Might be educational for some people here too as well. Yeah, it says $1 billion quote stake headline, I guess. I mean, maybe, but they're over a 5% owner, so they would have to report that on a SEC filing, and that's just not there. So that could just be a headline. I don't know if that's actually a real thing or not. I mean, we get, maybe the third. I think there's a. I don't think they have to file 13G immediately, so maybe, but I just can't put any. I mean, I wouldn't put any value on that anyway, but without a 13G, I definitely can't put any value on that. Yeah, so all you do is go to the option market and you add the at the money calls with the at the money puts, which it already does it right here on Thinkorswim. So the market's pricing in a $31 move basically either way. So it's basically pricing in like a 7% move. So it's most likely going to move that. It's not really an opinion thing. That's what the market's pricing in. And you can just do 31 divided by what the price is. And that's 8%. So the market's pricing in an 8% move. So, if your opinion is that it's not going to move, then that's fine. But the market's pricing in a move much larger than 5%. From TechCrunch, just skimming earlier. Oh, that's fair. That's a lot. How accurate are these predictions normally? I mean, relatively accurate. I mean, that's why the market's. That's what options are, is pricing in the future moves of the stock. That's why most people lose trading options, because if you're buying an option, it's already priced in, and every single day that goes by, you lose value on your options. So, that's why most people lose on options, because all options are doing is pricing in what the future volatility of the stock is going to be, basically. So, relatively accurate. But, earnings is pretty random. You can't really predict whether it's going to go up or down. And, like Riot yesterday, Riot didn't even move. So sometimes the stocks don't even move. No, I guess Ride's down 5% now, so potentially, the market had that priced in, but I didn't. I don't really ever look at that. It's just, that's just, that's what options are. They just price in the future moves of the market, pretty much. So you only win when the market falls to predict the future move up/down. You only win when the market's wrong, or if you buy the option and then like in a short amount of time it makes that move in a short amount of time. If you buy like a 2-week option and it's pricing in like $5 and it goes up like what is that? 10 divided by 5, 50 cents a day basically. You're not going to profit on that option because that's what the market's pricing in. But if you buy the option and the market's pricing in $5 and then it goes up $5 literally the next day, that's how you profit. You profit off the market being wrong. Just like sports betting, If you bet on, sports betting is the perfect way to like make sense of options in my opinion. So, we'll look at something here. Oh, it doesn't show the odds. Oh well, I want to look at this anyway. Max Holloway versus Charles, bro. Poor Max is gonna get tapped out, bro. Oh, Raul Rosas Jr.'s fighting? Hell yeah. Alright, I'll look at that in a minute. So if we look at a sports book, this is just the only thing I can compare it to, I suppose, that would maybe make sense. So, where are we going? Max Holloway's the underdog in that fight? Or the favorite? That's actually insane. I wouldn't bet on that. Plus 175 is nothing, but I can't believe Max Holloway's the favorite in that fight. So, like, I don't know. Anyway, we'll just go off of this example. So, Max Holloway is the favorite of negative 230. If you bet on Max Holloway $100, you make $43. But if you bet on Charles, you bet $100, you make $175 profit. So the way you make money sports betting, basically, is by the market being wrong. Well, you could bet on Max because you could bet what the market thinks, and, that's going to be higher odds that works. But the way you profit large amounts is by betting the opposite of what the market thinks. And that's in a lot of ways the same as options, because, if the option market's pricing in $5 and you think the stock could move like 7 or 10 or something, you would make that bet and, that would be the profit. But like I said, if you made that bet and the stock only went up 50 cents a day or whatever, and it made that $5 move, but it made it, it's at that $5 move on the final day of expiration, you wouldn't profit. So the way you make money on options is by the market being wrong or the move happening faster than it is predicted to happen, if that makes sense. Hopefully that makes sense. Yeah, it does look like a really good card. Max Holloway versus Charles. D. Ritter. Raul Rosas. Choo wee wee. I like Raul Rosas, bro. He's funny. Choo wee wee. I don't really know many of these people, though. I don't know many of these people. This should be a good fight. Choo-wee-wee. What other fights do you got this year? Nothing I'm really interested in. I don't know any of these people. I don't know any of these people, bro. There's so many new fighters, it seems like. Hey, look, it's Monsterot. She's goated. Except she's fighting someone who's undefeated, so I wouldn't bet that. Oh, Michael Page fights in March 21st. Michael Page is fucking sick. Israel's gonna fight. And Alexa Grasso. When's this? March 28th. Terrence McKinney. Chase Hooper back in the game. If Chase Hooper's the fucking who's he fighting? Who's this guy? 9-2. If Chase Hooper is somehow the underdog in this fight, I would bet that every day of my life. I probably won't bet it, most likely, but depending how much the underdog is, I might bet that straight up. Chase Hooper's fucking goated. Yeah, I don't know any of those people. Tatsuro Terry. Kevin Holland, bro. This dude fights so much, bro. He's not the best, but he just fights so much. It's impressive. Tatiana Suarez. I think I know who that is, don't I? She'll probably be the favorite. Cub Swanson. He's goated. Gilbert Burns. Alright, they don't have the rest of these cards. I just wanted to look at the UFC schedule. It's been a while. What do we got for economic data? Not much. Still some stuff yet to come out. A lot of international data. Not really interesting to me. Pretty much everything in the market's down. Materials and industrials leading the way. And I think it's funny, we were talking about how food and stuff isn't profitable, but yet literally the first line in Target's earnings, food and beverage, beauty and toys, delivered net sales growth in the quarter with strong trends in essential and home compared to the third quarter. So, you know, obviously I don't know the margins there, but that's the first line in Target's earnings report. Non-merchandise sales grew over 25%, with membership revenue more than doubling from a year ago. Double-digit growth from Roundel, and over 30% growth in Marketplace. Same-day delivery powered by Target Circle 360 grew 30%. Sales and traffic trends accelerated in the last 2 months of the quarter. Yeah, I get it. Target's sick, but I don't really want to look into it. Let's see. What do we got for news? Iran nonsense. I can't believe how much the market bounced back today. What's up, Muma? I don't know when that Ronda Rousey fight's supposed to be. I forgot. Not really interested in it, if I'm just being honest. It's not going to be a good fight by any means. Bunch of two geezers getting back in the ring. or the octagon, I should say. Apple raises MacBook prices across the board as M5 chips, new display signal AI first strategy. News isn't that interesting right now. I don't really care too much. I mean, obviously, it's sad that like U.S. soldiers are dying and stuff, and people are dying in general, but ultimately, I don't give a shit about this. I'm not a big fan of politics. The Sims 4 now sells fan-made content, but EA pockets 70% of profits. That's crazy. I mean, you can say what you want about Rhonda, but popular name. That's all that really matters in reality. She brings people to the seats. Doesn't matter if she's a good fighter or not. She's good enough to be there, and it's a popular name. People are gonna watch just because it's her. TikTok responds, users report app glitches and outage. KSI becomes owner of football team. Who did he buy? It's not a pro team, is it? Dagenham and Redbridge. I don't think that's a pro team, is it? I guess. I don't know. Not that. Who is it? It doesn't say. 20% stake in the 6-tier side.
I want to tell the world.
No music. I don't know what team this is.
Guys, tough fight.
Can you just tell me what team it is, bro? Why does it gotta be so... I don't know much about FIFA, though. I don't know what team that is. Whatever. Microsoft patents system for AI helpers to finish games for you? What? Has anyone played Marathon yet? What do you guys think of Marathon, if anyone's played it? Sixth level of UK Soccer League, still probably beat US #1 team. Maybe. I don't know shit about soccer, straight up. I used to play like FIFA 08, but that's about it. I don't know anything about soccer. First time hearing about Marathon. Marathon's garbage? You think? That's funny. Arc Raiders light years better. You should be queuing Arc Raiders with Muma, bro. I think Muma's a Rocket League player now, but he used to be an Arc Raiders player. I always see him on fucking Rocket League. I tried, he was busy. Nice. FIFA's a regulating body. Okay. Been playing Rocket League. Same, I've been playing a lot. I haven't been on Raiders for a week. Really? Rocket League took over your life, bro? Took over the gaming? It'll do that. It's one of those games. Oh, look at this. Man makes $23K a month by feeding 1,000 cats while owners are on holiday. How many times on this stream have I talked about like dog walking and like pet sitting and stuff? Man, 23K a month just feeding some cats. Fucking easy, bro. Easy. 55 feeding 55 cats in just one day. So easy. Such an easy business to start. Any other news? Doesn't look like it. Nobel Prize winner invents machine that generates 1,000 liters of drinking water in the desert.
I wake up
30 minutes. I don't want to watch that. Nobel Prize winning chemist has revealed a machine that extracts liters of clean drinking water per day from desert air, even in humidity as low as 20%. Professor Omar Yagi, who won the 2025 Nobel Prize in Chemistry for his work on metal organic frameworks, is behind the new invention. The new system uses advanced materials to capture moisture from the air and runs on solar energy. As reported, the device is roughly the size of a shipping container and is designed to operate on solar energy. This makes it perfect for areas with limited energy resources and communities living with arid conditions. This device can create water from desert air. The device uses sponge-like, ultra-porous materials that trap water molecules from the air, even in very low humidity. When exposed to gentle solar heat, the captured moisture is released, condensed, and collected as clean drinking water. Yeah, that's a fucking invention right there. That's crazy. According to reports, the system can generate up to 1,000 liters per day under harsh desert conditions, which makes it a potential solution for drought-hit areas and disaster zones where access to clean water is limited. Reflecting on what drove his work, Yagi recalled his youth and how hard it was to get clean water. My job as a child was to wait for the water to come from the city, because it came once a week or once every 2 weeks, and it came only for a few hours. So as soon as the world was around the neighborhood that water was coming, well, I went to the faucet to open it and fill as many containers as I could put my hands on within a specific period of time, and that's the water we had for that week. Yagi is hopeful the future generations will continue to make even more discoveries and create new technology that will help improve the lives of everyone around the world. Anyone, anywhere, of any background can go into a lab, and with the right preparation of mind, could make a discovery that can lead to solving a big problem in society. I'm not saying it's easy. It requires dedication. It requires thoughtfulness, but anyone can do it. That's the power of science. Science transforms us and transforms society in ways that we do not anticipate. Try something new and do it, and after you do it, you have a chance to discover something, and that discovery may change the world. That's an impressive piece of technology. Very impressive. Anything else? Pokemon fan accidentally solves Resident Evil Requiem final puzzle by luck. Pokemon Puma Pikachu basketball shoes revealed for 30th anniversary. I'm sure those will sell out instantly. St. Louis Cardinals revealed $29 unlimited food deal with bottomless soda, hot dogs, and snacks. That's kind of interesting. GTA owners take legal action against sandwich shop called Vice City Subs. Vice City subs, that's sick. Huh. Yeah, Muma's Gameshire. Bounce between two games if in CSGO and Rocket League instead of Raiders. You in a duel in a game right now? I don't know it. I don't think I even have Matt Romano added. Gotta be his bank pin. Working on a carbon capture contraption is like a green initiative to take carbon dioxide out of the atmosphere. That's kind of cool. 24, a tough nut to crack. Yes, sir. A lot of resistance. A lot of shorts. A lot of people taking profits. 24.20 is literally the highest volume price on GameStop, so makes a lot of sense. If you have a TradingView subscription, I can't look at it because I don't have one, but you can go to indicators, type in volume profile, and I believe it's, I actually don't remember which one it is. I think it's periodic. One of these volume profiles shows you like the volume profile for the whole chart, and 24.20 is literally like between 24.20 and like 24.50 or something like that is literally like the highest volume range on this chart. So just a lot of trading activity here at these prices. I wish I had the subscription so I could show you, but I don't. Turns out Coca-Cola is going to buy the carbon dioxide for drinks, so it'll get belched back out in the atmosphere. Pure scam. What? What? I don't know what you mean by that. I do not. Yeah, me either. I just, if someone out there does. I don't. Unfortunately. I mean, it's not really helpful, but it is notable. Is that your epic thing? Where's epic? There's that Xbox. Because I think your epic tag on Rocket League is potentially different than Xbox. How do you add someone? $8080. Oh, look, there you are, Matt Man. Matt Man. Got you, bro. I'd have to take a look then. Yeah, it was that. I just added you. My pin's 1471. I don't know what you're gonna do with it though. My tag still shows up as an old PS account. Really? Oh yeah, you play Fortnite. So you definitely have an epic thing. What's up, Jared? How you doing? Want to know why my nickname was Matt Man? Sure. What? Why Matt Man? Matt Man. Maybe because you're a Fortnite player, so you're like the Matt Man. I don't know. That's the only thing I could think. All right, nothing there. No, Matt Man. Matt Man. Here comes Peter on the clothesline, but he is not Peter, he is Matt Man. Matt Man. Touch my can with your hand. Mysterious Witcher 3 DLC keeps sounding more and more likely. New marathon content will be free, and seasonal wipes will be brutal. Oh shit. I love the Thomas the Tank Engine mods, bro. Resident Evil Requiem's arachnophobia mods now include one that replaces spiders with deadly tank engines. I think having a giant Thomas the fucking Tank Engine scarier than a spider, bro. That thing looks terrifying. I mean, I'm not an arachnophobe, but I think that looks way scarier than a spider. I would not want that thing coming at me. Thomas the fucking Tank Engine. Oh, what's this? US physical game sales just hit their lowest all-time tracked point in 30 years. US physical video game sales in 2025 amounted to roughly 1.5 billion, the lowest all-time tracked figure in 30 years per a report from Circana's Matt Piscatalatella, or whatever. I don't think I said that name right. While the figure on its own seems grim, there's a silver lining as the 11% drop in physical video game spending from the year before also marks the lowest rate of decline since 2021. There's also a flip side to the flip side. Piscatella's post on Blue Sky follows Circana's 2026 forecast report on February 11th, which states that 2026 has the potential to reach a new record high in consumer spending. According to Circana, US video game hardware, content, and accessories sales in 2025 reached $60.7 billion, a 1.4% total increase over 2024, and just shy of the $61.7 billion record set in 2021. Oh shit! Bro, that's a positive piece of news right there. That is actually positive as fuck. Oh, I thought physical video game sales were dying. I mean, they were, but they're potentially gonna start increasing. Holy shit, that's actually so positive. That is so positive, bro. So if 2026 is set to be a record high for US video games consumer sales, yet 2025 was the lowest recorded point in physical video game media sales since 1995, what's the disparity here? Circana report seems to indicate that shifts in consumer behavior, including an accelerated adoption of cloud gaming and the ever-rising popularity of subscription-based services like Xbox Game Pass and the PlayStation Plus game catalog, may be to blame. While Piscatella notes that the 11% dip in physical media sales is far better than the 28% recorded in 2024, adjusting the 1995 physical video game sales figure for inflation makes things look all more grim, as the total inflation rate from 95 to 2025 is roughly 113%. Or as Piscatella puts in the follow-up post, there's not much further for things to fall now that we are this close to the bottom. So yes, the rate of decline slowed, but that's mostly because we're nearing the bottom, and the launch of Switch 2 helped stabilize. There's definitely something to be said for the desire to return to analog and non-connected devices, especially for Gen Z, but dramatic shift, don't see it. What are the comments here? interesting part is where I live. One of the only other GameStop locations nearby closed, consolidated into only other store. Included all retro games, consoles. So at least in our local market, the one store is doing some serious business, and sales have dramatically increased naturally. Woo! Woo! I mean, that's just a comment from some random person, but that's damn, that's positive, bro. Digital downloads and streaming games have been dominant norm for a long time now, so this is unsurprising. I know here in Columbus, Ohio, many of the GameStop have closed, and where I live here in the South Side, there's exactly one game store selling mostly used games, cards, and Funko Pops. Hell, the GameStop right by OSU closed recently. That's been there since EB closed, now demolished. Okay, blah, blah, whatever. Okay, this is an interesting one. This comment's interesting. Anything else? What the fuck? What the fuck? A Sims 4 player has created and uploaded Jeffrey Epstein's family to the game's online content gallery. That's fucking ridiculous, dude. Family features multiple children wearing only towels. Bro, that's fucking ridiculous. Bro, I can't read the rest of that. That's actually insane, bro. I can't read the rest of that. That is insanity. Holy shit. GTA 6 leak. What's this all about? Ew, music. That looks like shit. But it is 4 years old. Okay. Not a very interesting leak. Flood of microslop messages forces Microsoft's official Copilot AI Discord into lockdown. No way. Message history has been reportedly wiped following an influx of messages using the term microslop. Exactly what instigated the initial incursion of anti-Copilot messages in the server is unclear, but users began flooding the Discord with variations of microslop once news of the term being added to the list of inappropriate phrases came to light. Wait, microslop's an inappropriate phrase? What's up, Hugh G? What's up, Hugh G? How you doing, bro? Why did GME go down and go back up? The market was down a fuck ton earlier. So, that's probably why. The Russell was down like over 3%. The Nasdaq and S&P were down over 2%, but they all bounced back. Yeah, they all bounced back. Sims announces a creation club style marketplace and maker program enabling content creators to sell their work directly to players. Yeah, but they take 70% or whatever. It's 113. Let's see. Man, I see all this Resident Evil news, and I'm like, I want to play that. What was that Magic the Gathering thing? No, nothing. A lot of nothing. Oh yeah, I still need to watch the Scary Movie 6 trailer. That's gonna be probably hilarious. Most likely hilarious. I just always see people coming in asking one or the other. Today seemed like a good day to ask both stupid questions in one sentence. Fair enough, fair enough. Oh yeah, Hugh G, I don't know if you're interested, but I think they're doing another drop on for Ascended Heroes on GameStop. I saw. I don't know if it's already sold out or anything, but they're doing another drop on. Oh, it's sold out already. It was available yesterday, but yeah, unfortunately, probably already sold out. Because Resident Evil looks fire. Yeah, I've heard it's really good. I opened one ETB on drop day, regretted it, pulled a mega attack. Saw that I really only want the ETB if I can get it by fighting people outside of Target for MSRP. Fair enough, fair enough. Fair enough. Such a sick set. I've played against it, a lot of the cards on TCG Live. But I haven't really looked at like how much the cards are going for and stuff like that. I feel like I'm the only person who like actually plays the game. Honest, like straight up, I think I'm the only person who actually plays the game. Pokepad's great for play. Wait, what Pokepad? Biggest set ever too, so I'm definitely not going to get anything I want. Yeah, it's gonna be hard. I played Tag Pocket a decent amount, still haven't fought with TCG Live. I think that's a different like meta from what I've heard. Cards called Pokepad. Oh. Pokepad. Oh, Palpad? Is that what you're talking about? Oh, right here. Search your deck for a Pokemon that doesn't have a rule box, reveal it, and put it in your hand, then shuffle your deck. Trainer? Oh, it's an item, okay. I mean, that's okay. There's so many cards like that, though. Most good Pokemon have a rule box anyway. So I don't know. Pulled 4 IRs on a reverse hollow Pokepad. Still the most valuable card I've pulled. Used to play a lot 2 years ago, kind of stopped. Yeah, I don't play that much, but I just feel like nobody plays the game. Everyone just like collects and flips. $12 is a common card because it's use. Oh, really? Interesting. To me, it doesn't seem that useful, but I mean, it must be good with a certain deck or something. It wouldn't be useful for the deck I play with, that's for sure. But $12 is quite a bit. Quite a bit for a common card. It's going back down. Is it? I mean, it should. It's only been shorted like 10 times at this point. How come you're gaming again? Thought it was a bad influence on you or something. Maybe I misremember thinking someone else. I mean, I don't think gaming's like the best use of time, but I just don't have anything else to do, to be fair. And it's good content. Something to do on stream when there's nothing else to talk about. And Rocket League's literally the only game I play. I don't play anything else. I mean, I'll play Pokemon TCG sometimes, but Rocket League's the only game I play. That's why they call it pastimes. Good time when we played Skate. Skate was fun for a little bit, but Skate's kind of trash, unfortunately. It's not the best game. You gotta have people to play with as well. It was fun for a week, literally. Yeah, basically. It was not that great. And there was just so many bugs. Like, I couldn't even, like, complete a lot of the Halloween missions when that first event came through. I couldn't even beat the game because my shit was glitched. I was, like, locked on my missions or something. Like, that game is so garbage. It's actually crazy. They just released a broken game and tried to, you know, sell some microtransactions. It's ridiculous. I saw an article. A bunch of the team got laid off or something like that, and they put one of the areas behind a paywall. Skate 3 much better. Yeah, Skater XL's the best one, but Skater XL has no, like, you literally don't do anything on Skater XL except tricks. Sessions is really good too, but I haven't really played Sessions that much. We'll have to get a bunch of people from the chat and play some Rocket League sometime or something. I was playing with Muma and Hugh G like a week or two ago or something like that. That was pretty fun. I was whooping their ass with no boost. It was so funny. I was dying. You should see my homie Fly though, dude. I play 1v1s with my friend Fly. He's so fucking good, bro. I get destroyed every time. He just abuses me. It's like, it's bad. It's bad. The skill gap in that game is crazy. I'd be down. I had coworkers playing a 3v3 private, so fun. Yeah, and you can put on like mutators and stuff. We used to do a bunch of mutator games back in the day. I don't really remember all the mutators, but there was some funny ones we used to do. Pro RL is an entirely different game from what I do on the field. Yeah, bro. I mean, even like the top players, like SSL players, the difference between a pro and someone at like the top rank of the game is actually like wild. I tried, no good to me. I had direction pad and A and B buttons. These games too much. Fortnite was the same. I don't have enough fingers. Rocket League's a hard game. Honestly, Rocket League's probably one of the hardest games you could ever play. Like shooter, there's certain shooters that are really hard, but every shooter is basically the same game. So like your skills from one shooter to the next is transferable. There is not a single game like Rocket League. They should force the pro RLers on to get mouse and keys. Nah. I mean, that's if you like me, it just gives you something to look forward to, I guess. I don't know if I'll ever get that good, but maybe if I kept playing. If I kept playing, I would be that good for sure. But I like the grind of that game. I like getting better at it. Like playing it's okay. I don't mind playing, but the fun for me on Rocket League is just strictly like getting better. Never grew up with them back buttons. I can't do it. The right trigger? You've never played PlayStation before? They had the triggers on PlayStation. When I figure out how to turn off ball cam and actually dribble, I'll be proud of myself. Oh, it's easy. I could literally teach you in like a minute. It just takes practice. I was showing Muma yesterday actually. It's so easy though. I mean, it's not easy. I won't say it's easy, but once you know how to do it, it's not as hard as than as you think. It's all about how you think about it more than anything. All you got to do is go into free training. You come up to the ball, you boost into it, and you try to like keep on the back of your car like that. That's how you slow it down. And you don't watch the ball. You just watch the little circle on the ground. Like, look how slow I'm going. You literally just do this, and then like if it's going forward, you speed up a little bit. If it's behind you too much, you let go of the gas or you brake. If you want to turn left, you go to the left side of the little circle. If you want to go to the right, you go to the right side of the circle and you boost. And yeah, you just do this. Like it's not hard, or it's not easy by any means, but like when you think about it correctly, it's not as hard as you'd think. Because I'm not even looking at the ball. I'm just looking at the circle of the ground. And honestly, I don't even need to look at the circle of the ground. I can like look at the ceiling because I've done this so much. Like I could look around while I'm doing this because I've done it so much, but yeah, you don't watch the ball. You just watch the circle. And then once you get good at it, you can start looking around while you're doing it. And then you can get good at flicks. You know, you can flick it in the air like that. So it's really not as difficult as you would think. I mean, it's still hard, obviously. Like, it's not easy. But once you figure it out, it's not as hard as it. And with the mods, like, you don't even have to do that. You can just click the little button and it'll put the car or the ball right on top of your car, and then you can go from there. If like you can't do this and set it up. Oh, I just messed up. If you can't just go up here and just like get it on top of your car, you know, you can just do this and start dribble with the little button. And then you can work on picking it up later. Like, it's not that hard. It's not that hard. It's just actually getting good enough to actually do something with it. That's where it gets hard. Wait, why is the screen black? Oh, there we go. Can't get past Plat 2. My only suggestion is watch the teammate or watch the other players more. Don't watch the ball. I think that's the biggest issue with most low rank players. They just watch the ball. But if you literally just watch the other team and you try to play off how they're playing, it's not that hard, like straight up. You can beat a platinum player with literally no boost. So, you know, if you can get to the point where you just watch what the other people are doing and then just make your plays off of them, and you learn how to position properly, getting to diamond's really not that hard. Getting out of diamond to champ, that's where, you know, skill comes in. But it's still, you're basically just playing off of the other team and like forcing them to come to you, basically. I feel like a lot of people just chase the ball and hit the ball. But if you just take time and watch the other team, sure, you're probably going to lose in the beginning as you get used to it. But after a while, you're going to start to learn more. Because it's just really thinking while you actually play. That's really what it comes down to. Like, if you're not thinking while you're playing Rocket League, you're never going to get better. Maybe one trigger on the last PlayStation had, and I bet I didn't do nothing. Maybe with like a racing game or something. Don't watch the ball. Yeah. It's like Dad always said, just keep your eye off the ball. In Rocket League, literally that's how you get better at the game, is not looking at the ball. If you're looking at the ball, you're probably never going to get better. Or if you're looking at the ball and that's all you're looking at, you're never going to get better. Looking at the other players is much better than looking at the ball. Because the other players are going to hit the ball, so eventually you're going to see the ball, no matter... And you're going to see the ball from your peripherals anyway. So, like, if you just focus on the other players and what they're doing, you honestly... It's hard to lose. But then, you know, mechanics come into play. Mechanics definitely come into play, but I beat people all the time that are way better than me mechanically. It's because mechanics don't mean anything if you're not aware of how to play off of people. No Fennec? Nah. Classic Octane. I'm a Wood League player, and I made it to a diamond. People I play in plat are be air drilled into the top of the goal, double tapping it. Makes no sense. Well, those are probably Smurfs, most likely. Those are probably higher ranked people with, you know, just low level accounts, so they can do that. But The reason why they're able to even set that up in the first place is because in like lower ranks, you have so much space. You know, you have so much time to make a play like that. But if someone, you know, someone air dribbling and doing all that stuff, that doesn't make them good at the game. It doesn't. They're good at mechanics. They're good at taking the ball in the air and doing something, and probably get lucky in a lot of cases. But being able to do that doesn't make you good at the game. At a certain rank, you know, that's the difference, is being able to do like flip resets and stuff like that. But at lower ranks, just because someone can hit an air dribble or something, it doesn't mean they're better than someone who actually knows how to play. Big brain game sense OP. It really is. It really is. At lower ranks. Well, even at higher ranks, but how you get better at that is, you know, doing it. Because you might be slow at first, you know, watching the other team and trying to play off them and stuff like that, but eventually you're going to figure it out. And then as you get better, you know, your decision making is going to get faster, and you're going to be able to read what the other team's doing faster. So it's you know, in the beginning it's going to seem like what I'm talking about, if you actually do this, it's going to seem like what I'm talking about doesn't make any sense, but over time it'll start to make sense. And honestly, if someone actually like takes if someone actually takes the time to sit and like think and play off what the other team's doing, I guarantee you're going to be way better at that game. 100%. Way better at 2v2. Yeah, 2v2 is easier. More time on the ball. You don't have to go up in the air as much. 3v3, you got to be a little more fast paced, and your rotations have to be proper. I'm not that good at 3v3, honestly, but... And if you really want to get good, you just play 1v1. If you can handle it. 1v1 is the ultimate game mode to get good. Darts isn't complicated. I mean, darts is hard, though. The real game's in the chat. Nobody survives. 100% toxicity. I don't know. Debatable. I mean, at the lower ranks, people are toxic because they think they're really good when they're not. people at the low ranks will watch like someone my rank and see how we play, and they'll think they're better than like someone like me just because we're like playing slow or something. But you can beat those people. They're not hard to beat. If someone thinks they're better than they actually are, they're easy to beat. If you strategically planned what a saves and you're golden. Really hard, but it's just one skill throw. There's strategy to darts too, though. You only win if they uninstall. Not gonna lie, I troll crazy. I mean, that's probably why you can't get better, though, straight up. If you're focused on the chat and not focused on playing, you can't get better. My recommendation is turn off the chat. Telling someone nice shot doesn't benefit anything most of the time. And what a saving people definitely doesn't benefit anything. People get so triggered. I'm chilling, chat, unless I find out they don't return their shopping carts. That's not where the carts go. That's not where the carts go. The cart returns right over there. Seen Cater rage and vote forfeit at least 30 times. That doesn't surprise me. Holy shit, that's funny. Oh, that doesn't surprise me. That's so funny, bro. Can't get better voting to forfeit either. I definitely don't try to get better. That's fair. That's fair. But you can just get better naturally by thinking while you play, honestly. Like, there's a certain point where you have to train your mechanics and be able to do aerials and certain things, but at the end of the day, if you can just think while you play and, you're going to be ahead of a lot of people. UFC is different. I know how to beat anyone in that game. I'm fucking trash at UFC. I don't understand that game. I'll shit on anyone in a boxing game, though. I haven't even played a boxing game in a long time, but I could pick up a game like that and probably rinse anyone. What happened to Kate? Oh, she's not here anymore, obviously. What is this? Thinking sounds hard. It is hard. That's why, that's why most people don't get better, because they don't think while they play. And it is hard because Rocket League's also a fast-paced game, so thinking while playing a game as fast-paced as Rocket League is pretty difficult. Just toy with everyone on the ground till they quit. Yeah, that's the hardest part about UFC is fucking the subs and stuff. What was your other friend called? I don't know who you're talking about, bro. There's so many people that have came and left this stream, like hundreds of people probably at this point. You're trying to like ask about 2 people. It's like, I don't fucking know, dude. There's so many people that have came and went. Give everyone the Marab treatment. Hey, it works in real life. It probably works in the game. You ever tried double drunk driving GTA? You drink and your character drinks and then you do a taxi mission? No, I haven't done that. But that's hilarious. I don't drink alcohol like ever, so no, I don't do that. That's pretty funny though. Double drunk driving. Oh, are you talking about Kristen, bro? Or Bruno? Can't talk about Kristen. Yeah, you can't talk about that. You can't say that name in the chat anymore. It's Bruno, I suppose. That's what I've been told. She's secretive. She's the most secretive, not secretive person. This man thinking. I just remember a couple ladies. Yeah, GME Bruno. Classy lady. GME Bruno. What's up? I'm Bruno. What's up? If you say the name 3 times, she appears. Unfortunately, that doesn't work. Fuck. Let's see. Nothing here, I guess. Reddit is like the most useless shit, bro. I don't know why everyone thinks the acquisition is going to be eBay. I don't know why everyone thinks that. Yeah, she transitioned. I mean, not really, but yes. She just doesn't want her name said in the chat for some reason. Even though I've known her for like 6 years, so it's like, I don't know how she expects me to just like change that now, but we'll see, I guess. We'll see. Reddit's the best evidence for dead internet theory. Fair. I kind of agree with that. Only thing I use Reddit for is PSA power packs. I didn't even know that was a thing. Everyone just posts good polls here. Nobody posts bad polls. Oh, there's a bad one. I don't think I'll ever open a power pack again, to be fair. So that's kind of cool. Good to know that's a thing. Maybe I'll look at that more. Trade anything day makes me think eBay testing what is called reverse logistics. I mean, maybe. I just don't see how eBay could become a several $100 billion company. Just don't really see it. I think eBay is like a potentially obvious choice, but I just don't see how it could be a several $100 billion company. It just doesn't seem realistic. There's always something funny in there. A week like a completely shattered slab as a pole. That's fucking hilarious. They start selling VR glasses that scan items in your home that gives you an estimated bidding price if placed on eBay. I mean, that only works if the glasses can literally know exactly what that item is, or you can scan a barcode, which you can already do. If you're looking at an item and you have to know the exact details. You can't just place an item on eBay without the details. You'll never sell it, and you won't get the right price or anything. Researching items on eBay is easy, but you can't just randomly post something for a random price. It's either gonna never sell or you're gonna sell it for way cheaper than it actually is worth. So I just don't think that's something you could do. Meta glasses are sick for streaming. I've seen a little. I mean, we watched the presentation when they came out. Those like sport ones are kind of cool. The Oakley ones, I think they are. I think they're Oakley. Those ones are kind of cool. Estimate gives you a reason to dig deeper into what could have potential value. I mean, it doesn't. It's simple to research something though. Like I don't. There's no like potential value. It either has sold before or it hasn't. And if it's never sold before, you're never gonna sell it. It makes most sense for collectibles. I mean, what happens when you scan something and there's 5 different variations of that same collectible, and one of them's worth $1,000 and one of them's worth 20? You're not gonna get a proper valuation for your item in that way. There's always variations of things. So if you're not able to put in the exact detail of exactly what you have, an estimation doesn't like benefit you, I don't think. I don't see how it could benefit you at all. I don't know, maybe it just works. Yeah, it's not a I can't get behind this. I've posted and sold way too many things on eBay to get behind this. I've posted thousands of things. I used to work at a warehouse that posted on eBay. Like I've literally posted thousands of items on eBay, and myself personally have sold a few hundred things on eBay. So I just can't get behind this. I know what it's like to have an item in your hands and try to find it and not be able to find it, and there's just no way you'd ever sell it. It's impossible. If you don't know every single detail about your item, then it's just you're not going to sell it. Unless the only way you'll sell something like that is if it's like a really expensive item that you sell for dirt cheap because you didn't do your research. That's the only way you'll sell something like that. But other than that, it's just not possible. It's just not possible. All right, what are we streaming again? Crowdstrike. Okay. Crowdstrike. What is going on here? There we go. 5 p.m.? Oh my god. Why does it start so late? That sucks. It's like 2 hours from now. Bruh. Oh wait. Eastern time. So, okay, never mind. Stop shitting on dreams. I'm not shitting on dreams. It's just not possible. Unless you want to get ripped off, you know, then it's possible. Which I guess that fits perfectly into GameStop's business model, so sure. But you're just never going to sell something. And also, you're not factoring in fees, you're not factoring in shipping. There's so many things that factor into selling something. It's not just, oh, I have this item, I'm going to sell it on eBay. There's a lot of things you wouldn't even make money on because shipping's so expensive. But more than that, there's a lot of things you just wouldn't even be able to sell. And maybe you would be able to sell it, but if you don't know your details, if you don't know the details and you don't, yeah, I just can't get behind that idea. It just doesn't really make sense. Partner, if the thing is authenticated, it already has the data put into a database, so that's completely different. But if it's just some random card, for example, there could be 10 different variations of that same card. Especially if it's like an old card. Like a lot of the classic cards have like I can't remember exactly what year, but they re-released all the 1999 cards in a different box. I forget exactly what box it is, but if you have one of those cards, or say you have a 1999 card and you scan it and it prices it like it's one of those 2016 boxes or whatever it's from, like, you're not going to get the value of the card. And it's just, you have to know your item yourself. You can't just have some AI do it for you. I just don't see how that would work. And if it's authenticated, that's a completely different thing. From what you've said, I grab, I don't fucking know. Like, I grab I don't know, dude. Like, what the fuck do I have here? I grab this thing, this whatever the hell this is, and I look at it. Like, how does I just don't see how that would work. There could be like 10 different variations of this same fucking Beanie Baby. So I just don't see how that could work. If it had a tag, and if it had like a tag I could scan or something, sure, then yeah, that's fair. But If there's no like tag with real information or anything, like I just don't see it. Several of these concepts were mentioned in his Charles Payne interview. I don't remember any of that. I don't remember ever hearing anything like that. He said specifically that glasses are stupid and retarded looking. So I don't know where you got that idea from, because I specifically remember Brian Cohen saying that he thinks AR glasses are retarded. So I'm pretty sure those are his exact words. You ever watch Pawn Stars? They bring the items in for verification. Yeah, but what do the Pawn Stars do? They open up a web browser and they research that item. They don't. Sure, on the show it probably makes them seem like they know everything, but they have to look it up and they have to research it themselves. They have to find if it's sold before, or if it's been listed before, if it hasn't sold before. There's so much that goes into researching an item. It's not just that simple. It's not. There's a lot of things out there that have never sold. And there's a lot of things out there that haven't sold for years. So I just also said there's a problem with dividends, then announced a warrant dividend. A warrant dividend is completely different than a dividend. A warrant dividend it's not taxed. He said there's a problem with dividends because of tax. A warrant dividend isn't taxed. That you basically got given a stock option. The only way you get taxed on a warrant is if you sell it. So it's not the same thing. You basically got a stock compensation award from GameStop. You didn't get paid a dividend. I always said it's a dumb idea. You can't even get people to wear glasses. They need to actually see. I mean, it's an interesting idea, but I don't know if I'd ever use it personally. Maybe one day it could replace the phone. Who knows? Do you remember in school when they said you would never have a calculator in your pocket? And now you literally have a calculator in your pocket 24/7? Like, things change. Ready for the chip in my brain? I'm okay to drop it. Just something crossed my mind. Thanks for entertaining it. I just don't see how it could be practical. Like I said, I've sold too many things and listed too many things to like see how that could be like practical. Like this would be a perfect reason why this wouldn't work. Imagine you wanted to sell a pair of shoes. How does the glasses know what size the shoes are? Know what colorway the shoes are? There could be like 4 different colorways that look almost exactly the same. How does the AI know? You know, there's so many things. There's so many things. How does the AI not know that the shoes are fake? You know, I've put fake shoes on eBay before and sold them, like $1,000 or like $3,000 shoes or something like that. I can't remember. Sold them, sent them to eBay, and they got verified as fake, and I got them, and they got sent back to me. How would glasses know whether the shoes are fake or not? Like, there's so many flaws with that idea, I feel like. So many flaws. For me, I don't see it catching on. I mean, we'll see. AI will be all-knowing given long enough. I think the glasses, a screening tool, just identifies potential value. Yeah, but that's the issue there. There's no such thing as potential value. It either has value or it doesn't. With like PSA cards, you know, certain cards, the prices vary, especially non-liquid cards. So, but that's completely different. Those cards are already in a database where every detail about the card is, you know, there. So that's just, you know, a thing that has been authenticated and some random thing. It's just not really the same. And yeah, to me, there's no such, when you're selling an item, there's no such thing as potential value. It's either sold before and it has value, or maybe it's a really rare item that you have to make the value yourself with a lot of research, or it's literally just a worthless item, which there's a lot of those. But either way, most items have a barcode, so you can already scan stuff with a you can already scan a barcode with your phone and it gives you everything about it. So it's like, if you're just looking at some random item with no barcode, no details, no nothing, you're not going to know what it is without researching it. And I wouldn't trust a AI to do that for me. I've listed some pretty abstract items where you have to go to some random fucking websites to find out what it actually is. Like weird, like little hardware parts and stuff like that. Like, I don't think an AI is going to be able to do that. I really don't. Maybe, but I don't think so. It'd work for generic items, and someone's selling generic items cheaper than you anyways. I mean, what do you mean by generic items, though? Don't call it potential value, call it the determined value unknown at this time value. Well, then that's just a waste of time to even scan that, I feel like. But I don't really want to talk about this anymore because it just seems unlikely. A rubber duck? There are 1,000 variations of a rubber duck. Literally 1,000. Like 40 different brands, 40 different colors, you know, or 100 different colors. Like that. See, that's the point. It wouldn't work. It literally wouldn't work. Unless it already has the barcode and it's in the box still or something. I just don't see that. I just don't see that. But let's see what the fuck this shit's all about. Oh yeah, we gotta do the stream clip, huh? We gotta do the stream clip real quick. It's not down that much, unfortunately. No, CrowdStrike's down 4%. How come every time I bet on these earnings, I lose everything, dude? Every single time, bro. Can't I just win one earnings report bet? Like, this is so rigged. The market's rigged. The market's fucking rigged, bro. The market's rigged. All right. CrowdStrike reports fourth quarter and fiscal year 2026 financial results. Surpasses 5 billion ending ARR milestone. Accelerates to 24% year-over-year growth to reach 5.25 billion. Net new AAR growth grows 47% year-over-year and reaches a record 331 million in Q4. Achieves positive GAAP net income and record non-GAAP net income in the quarter. Delivers record operating and free cash flow for both the quarter and the year. Reaches 1.69 billion in ending ARR from Falcon Flex accounts, up over 120% year over year. Okay. No. These are the dumbest stream clips, but they're just so funny to make because people take them so seriously for some reason. The market's rigged. Or bet. Like, this is so rigged. The market's rigged. The market is rigged, huh? So rigged. So rigged. All right. CrowdStrike Holdings today announced financial results for the fourth quarter and fiscal year 2026. Fiscal year 2026 will go down in the history books as CrowdStrike's best year yet, said George Kurtz. We achieved 5.25 billion in ending ARR, the fastest and only pure-play cybersecurity software company to achieve this milestone, driven by a record 1.01 billion of net new ARR. Our first year exceeding $1 billion of net new ARR. We also delivered record operating and free cash flow for both the quarter and the year. Our record results showcase the durability of our growth and cash flow generation. As enterprises rapidly adopt AI, CrowdStrike is mission-critical infrastructure, securing AI across every layer from GPU to agent to prompt. The AI revolution is creating a massive growth opportunity for CrowdStrike, one that our technology team and ecosystem are well positioned to continue winning. Gotta get this stream clip going. Even though it probably doesn't even matter. Probably would have been funnier with something down a lot, but I don't know if there's anything that's down a lot. Not very many interesting companies reporting today. Okay. Commenting on the company's financial results, Bert Podbeer, CrowdStrike's CFO. CrowdStrike delivered a record fourth quarter in fiscal year 2026, exceeding expectations across all guided metrics. The combination of accelerating growth, expanding profitability, and record cash flow generation puts CrowdStrike in rare air. While exceptional momentum across the business and a record Q1 pipeline entering fiscal year 2027, we have strong conviction to once again raise our fiscal year 27 ARR outlook. The AI revolution represents a new generational growth opportunity for CrowdStrike, and we are confident in our ability to deliver durable, profitable growth as we scale to our 20 billion ending ARR in fiscal 36. That's ridiculous. No comment. No comment. No comment on that. How come this isn't working? It's taking forever to upload a fucking short. It's taking a long time. Let's see. Revenue, total revenue, 1.31 billion, 23% increase compared to 1.06 billion in the fourth quarter of fiscal 2025. Subscription revenue was 1.24 billion, 23% increase compared to 1.01 billion in the fourth quarter of fiscal 2025. Annual recurring revenue grew 24% year over year to 5.25 billion as of January 31st, 2026, of which 330.7 million was net new ARR added in the quarter. Subscription gross margin, GAAP subscription gross margin was 79% compared to 77% for the fourth quarter of fiscal 2025. Non-GAAP subscription gross margin was 81% compared to 80% in the fourth quarter of fiscal 2025. Net income / loss. GAAP loss from operations was 6.9 million compared to 79.3 million in the fourth quarter of fiscal 2025. Non-GAAP income from operations was 325.8 million compared to 224.8 million in the fourth quarter of fiscal 2025. There we go. That took way too long. All right, net income / loss attributable to CrowdStrike. GAAP net income attributable to CrowdStrike was 38.7 million compared to a loss of 86.3 million in the fourth quarter of fiscal 2025. GAAP net income per share attributable to CrowdStrike diluted was 0.15 compared to a loss of 0.35 in the fourth quarter of fiscal 2025. Non-GAAP net income attributable to CrowdStrike was 289.1 million compared to 205.3 million in the fourth quarter of fiscal 2025. Non-GAAP net income attributable to CrowdStrike per share diluted was 1.12 compared to 0.81 in the fourth quarter of fiscal 2025. Cash flow, net cash generated from operations was 497.9 million compared to 345.7 million in the fourth quarter of fiscal 2025. Free cash flow was 376.4 million compared to 239.8 million in the fourth quarter of fiscal 2025. Cash and cash equivalents grew to 5.23 billion as of January 31st, 2026. Full year fiscal 2026 highlights. Revenue, total revenue was 4.81 billion, a 22% increase compared to 3.95 billion in fiscal 2025. Subscription revenue was 4.56 billion, a 21% increase compared to 3.76 billion in fiscal 2025. Subscription gross margin, GAAP subscription gross margin was 78% for both fiscal 2026 and 25. Non-GAAP subscription gross margin was 81% compared to 80% in fiscal 2025. Income / loss from operations. GAAP loss from operations was 293.3 million compared to 116.4 million in fiscal 2025. Non-GAAP income from operations was 1.05 billion compared to 879.9 million in fiscal 2025. Net income / loss attributable to CrowdStrike. GAAP net loss attributable to CrowdStrike was 162.5 million compared to 15.2 million in fiscal 2025. GAAP net loss per share attributable to CrowdStrike diluted was 0.65 compared to 0.06 in fiscal 25. Non-GAAP net income attributable to CrowdStrike was 956.6 million compared to 814.6 million in fiscal 25. Non-GAAP net income attributable to CrowdStrike per share diluted was 373 compared to 324 in fiscal 25. Cash flow, net cash generated from operations was 1.61 billion compared to 1.38 billion in fiscal 2025. Free cash flow was 1.24 billion compared to 1.07 billion in fiscal 2025. Share repurchases. Subsequent to January 31st, 2026 and through March 2nd, 2026, the company repurchased 143,801 shares of its Class A common stock under its existing share repurchase program at an average price of $351.97 per share for an aggregate purchase price of $50.6 million. As of March 2nd, 2026, approximately $949.4 million remained available for future share repurchases under the share repurchase program. Recent highlights. CrowdStrike's module adoption rates were 50%, 34%, and 24% for 6 or more, 7 or more, and 8 or more modules, respectively, as of January 31st, 2026. Announced the general availability of Falcon AI detection and response. Acquired SGNL, a leader in continuous identity. Acquired Serific Security, a leader in browser runtime security. Announced the general availability of Falcon ID, extending the Falcon platform with zero friction, phishing resistance MFA. Achieved ISO/IEC 42001 column 2023 certification, validating CrowdStrike's disciplined, extremely unaudited approach to the responsible design, development, and operation of AI-powered cybersecurity. Announced an expansion of strategic alliance with Microsoft that allows organizations to purchase the Falcon platform on Microsoft Marketplace using their existing Microsoft Azure consumption commitment. Revealed a strategic partnership with Vast Data, combining Vast native data layer governance and platform-level controls with CrowdStrike's enterprise-grade threat detection and automated response. Announced new regional cloud deployments planned for Saudi Arabia, India, and the United Arab Emirates, with additional geographies to follow. Signed a memorandum of understanding in Saudi Arabia with Aramco. Announced an integration that connects Falcon Shield with the Qualtrics XM platform to provide organizations with the real-time visibility and automated protection for user activity, permission, configurations, and data access. Selected by NordVPN to power its Threat Protection Pro feature, bringing industry-leading threat intelligence trusted by enterprises and governments to millions of consumers worldwide. Delivered 100% detection and 100% protection with no false positives in the 2025 Mitre attack enterprise evaluations. Recognized the Customer Choice 2025 and the Gartner Peer Insights Voice of the Customer for endpoint protection platforms. Voice of the Customer for application security posture management tools. Voice of the Customer for external attack surface management. And Voice of the Customer for user authentication reports. Announced the findings of a Forrester Consulting Total Economic Impact study, showing that customers who replaced legacy endpoint security with CrowdStrike achieved a 273% return on investment by reducing breach risk and simplifying security operations. Named Frost & Sullivan's 2026 Company of the Year for Cloud Workload Security and the 2025 Company of the Year for Global SaaS Security Posture Management for the second consecutive time. Well, now it's going up, so now my stream clip was pointless. Now my stream clip was pointless. And not much else to talk about, really. They lost 161 million, though, so I don't know how great that is. I just feel like all these things are overvalued as fuck, bro. Like, every company we've done an earnings call on is so overvalued. It's insane. Wait, what? Where's their earnings call? What? Oh, man. Whoops. Gotta try to find the earnings call. I guess my last point is proof of concept, or the apps that already exist for sports cards collecting and pricing. They scan your cards, store them, and they provide real-time pricing, Colex, Ludex. Yeah, but that's the whole point though. Those are already, graded cards with all the information. Everything is already like with a PSA certification. You scan you I don't have a physical card, but you scan the little barcode on the PSA slab and it tells you everything about the card. Like that's completely different than just like finding a random item and just looking at it and scanning it. Like that's just not I just don't see how that would work. Scans non-graded cards too. I have no clue. I don't even know what those things are. But how do you know it's correct? How do you know if it's scanning correct? If you have the difference between the $1 million Charizard and the $10,000 Charizard is pretty difficult to spot, I think. So, I don't know. But you're talking about cards. Cards are completely different between some random item. And I just don't think if the card's graded, I just don't see how you would know exactly what it is. Like I'll try to find an example, I guess. Base set. So we go to this, sold, highest first. I mean, obviously all these are going to be slabs. All right, here. First edition, 1999. Okay, this is there's that one, and then there's the, I forget which, base set remake or something. I don't remember what the box is called. I mean, this is a good example. You know what? I'll grab that one too. I mean, conditions a little different there, I think. Are these the same card? Oh, those are the same card, so that's not a good example. I forget what the other set's called. I wish I knew. I just don't know what it's called. Charizard. What is it called? That one? Yes, Pokemon Celebrations. That's what it's called. Let's put first edition, I guess. If there even is that in the pack. I don't even know if that's in the pack for collectors thing. But oh, I guess it has the stamp, so that would be the differentiator, I guess. But I thought do all of them have the stamp? What's this one? So that's a 9. Okay, so I guess the Pokemon Celebrations has a stamp, so I guess that would be how you would identify whether it's the 1991 or not. But I thought there was one that didn't have the stamp, so I don't know. Either way, another example would be this same exact card. You know, I'll grab a few of these. I mean, this is a replica art. That's not even a... See, that like this card is a fake card. It looks pretty similar to the real card. What happened to the... What happened to the first one I had? It disappeared. So, I guess my whole point is, how are you going to be able to tell, like, without doing research, how is some random, like, AI going to be able to tell the difference between Shadowless Hollow First Edition quality? Forget about the card as well. The quality of the card makes a whole different difference. The difference between a PSA 10 and a PSA 9 could be tens of thousands of dollars. The difference between a PSA 9 and a PSA 8 could be tens of thousands of dollars. So, you know, for one, how is the AI going to be able to judge the quality of the card? But also, look how similar these cards look. I mean, I can tell the difference here, but, like, this is a fake card, and it looks almost exactly like this card. How are you going to get a potential value when a fake card looks basically the exact same as a $78,000 card? Like, I just don't see how it would work. That's kind of my point. And, you know, maybe it'd be a little more obvious with cards, but it still goes back to, like, shoes, random items. You know, there is so much that goes into this that I just don't think you could just scan something and get a potential value from it. I just really don't see that. I really don't. Because especially when it comes to cards, the scale is, you know, could be tens of thousands of dollars of difference just because of a little scratch or a little fucking white spot on the back of the card. I just would never trust some glasses to make that decision for me. I'll read your messages in a second, but I've deleted this for some reason. Gotta find the earnings call. Here it is. What? 2 p.m. Pacific time? I'm so confused. Oh, okay. Here we go. Got it. Got it. I think I see the point you're making. There's small differences in cards that have tremendous impact on value and price. Well, you can also make fake cards. You know, it'd be tough to see without those listings. It'd be tough to physically see the difference between a fake card and a $78,000 card. I mean, it probably wouldn't be, but that's kind of the point. Imagine the scanning tool isn't perfect because it isn't going to be, but it could provide a value range $2 to $2,000. The upper limit might make an otherwise uncurious person research and grade. That's too big of a range, bro. That's not, to me, that doesn't seem useful at all. $2 and $2,000 is such a huge gap. Like, that doesn't seem valuable at all when you put it that way. I'm not suggesting the app grades the cards. That's not the point I was trying to make. Somebody just lost their job, like your session, they might start considering going through their collection and selling some stuff. Well, then you just open up eBay and you do research on your individual cards. But that wasn't the point. I wasn't making the point that the app is grading the card. I was making the point that the app doesn't know whether a raw card is a PSA 9, a PSA 8, or a PSA 7, and those grades, forget grades, but the difference between a PSA 9 and a PSA 7 could be thousands of dollars, hundreds of dollars, and you can't judge that based off of scanning the card. So I just don't see it. I just really don't. Either the card's worth $2,000 or it's not. It, like, that's really what it comes down to. You can't just give an estimate of a $2,000 card or a $10 card. You can't say a $10 card is potentially worth $100. That's probably illegal. Honestly, it's probably illegal. Do you know the value of digital power packs before you buy? That's not the point of power packs. But even power packs gets it wrong. I can literally show you. I literally just saw this when we opened this Reddit thing. Where is it? This one. This is Power Pack's estimation of this card. Power Packs thinks this card's worth $1,900. They're giving a $1,700 offer. This card's worth $1,200. Potentially. I mean, I can look it up, but what grade is it? PSA 5. So this estimation is literally worthless. It doesn't even know the real value of a card that's graded and has sold before. And I mean, this card probably has never sold, honestly. Guaranteed this card has never sold before. Let's see. What's it called? 172 Pikachu. $2025 Pokemon Simplified Chinese. I can't even look this card up because it's probably never sold before. The last sell was $1,450, December 29th. 1,400, 1,450. 2,000 actually recently. 1,400. Okay, so it's worth 2,000, but even then, the Power Packs thing says it's worth $1,900. It's a $2,000 card. How, like, that's not useful. They're not even giving you the correct value. So how is that useful? That's not useful. These are all PSA 10s as well. That's not even for the PSA 5. I bet the PSA 5's fucking worthless. A PSA 5's never even sold, so it's basing this card's value off of PSA 10 prices when this is a PSA 5. Like, there's huge issues with this thing you're talking about. And even the things that are already in place are incorrect, but I'm pretty, I can't believe we're still talking about this, honestly. We're supposed to be like talking about earnings and stuff. Like everyone, like a bunch of people have left because we're talking about something that's like not even a reality. So like we just got to drop this conversation. I don't even want to talk about it anymore. Like, we're supposed to be talking about this earnings and like reading actual things that are like actually like a real thing. Like, I don't want to talk about this anymore. I just literally showed you like multiple examples of why it wouldn't work and why it doesn't work. So like we just can't talk about this anymore. Everyone who was here is left because we're talking about something that nobody cares about, that nobody thinks is any, you know, it's just not it. It's just not it. If people actually thought it was a good idea, they would be like trying to make me understand your vision, but to me it's not a good idea. And I literally just showed an example of Power Packs being wrong with their pricing. So like, even if it is a good idea, it doesn't work for non-liquid cards. If you're trying to sell a card that has never sold before in a grade that has never sold, like, I mean, that card sold before as a PSA 10. There's a massive difference between a PSA 5 and a PSA 10. A massive difference. So, you know, they're pricing it, that's just wrong of GameStop's fucking, or PSA's, both. That's wrong of their system, pricing a potentially worthless card as a $1,500 or $1,700 card. Like, that's just actually ridiculous, honestly. The GameStop buyback has added liquidity to the market. The only reason GameStop's able to buy back the card is because you pulled a $1,000 pack for a card that, you know, they want to give you $1,700 for a card that's potentially worthless. So you'll pull another $1,000 pack, and then you'll pull another worthless card, and they potentially just made $300. Like, that's really where the buyback comes into play. The only reason they're able to offer a buyback like that is because they know they're going to make their money back on that card. That's the only reason. So, but we're talking about as an individual seller, you can't do that. Power pack, opening a power pack and being someone who just sells cards is not even close to being in the same realm. It's just not even close. And no rational person is going to buy that card. In the example I just showed, nobody is going to buy that card ever. Not a single person is going to buy that card. A PSA 5, when the PSA 10 sells for $2,000, maybe you'll get like a few $100, but if the estimate is thousands of $1,000, $1,500, you're never selling that ever. Unless GameStop buys it, but then that's just a totally different conversation. That's a totally different conversation. There's no potential value if GameStop is willing to give you an offer right then and there. From when you first brought that up, you made it seem like you're talking about like selling it on eBay. There's a complete different thing to selling it on eBay and having GameStop buy it from you. That's two totally different things. So maybe I'm just not understanding what you're trying to say, but I think we just wasted time on that conversation. Which is fine, I guess, but everyone left. Now there's nobody here in the stream because nobody wants to have that conversation, unfortunately. And that's not, it's not a big deal, but that's just the reality. We went from having 26 people here to 9. Like that should tell you enough. That should tell you enough, honestly, how people feel about that conversation. That tells me enough. Granted, most of those people are here for this earnings call. So they're not really here for the stream or here for me or here for you. So like that's, they're only here for the earnings call. You're only here for the earnings call. But I think that just still shows enough how people feel about that conversation. Like everyone left, nobody in the chat's typing or contributing to this conversation. So like I think that should tell you everything about the conversation. Still here, just tired. Nah, you're good, you're good. Feel free to ignore me, not gonna hurt my feelings. You're the only person being paid to be here. I mean, I'm just here because I like to be here. I get paid a whopping $2 to stream for 3, 4, 5 hours, so I'm not even really getting paid to be here, to be honest. But I just don't see the value in this conversation, especially when I've given multiple examples of why it wouldn't work. Like if you could, give me a reason why what I'm saying is wrong, then like sure, maybe I could try to see your perspective, but I just can't see your perspective because I've sold way too many things. Like I've just sold way too many things. I've posted so many things on eBay and sold things on eBay, and there's just no such thing as an potential estimate or anything like that. Like it's either, worth $2,000 or it's not. That's really just what it comes down to. And I would never trust anyone or any piece of technology to tell me that. So, yeah, we'll leave it there. We'll leave it there. And if it ever becomes a thing, we'll talk about it. But I just can't talk about, like, a hypothetical. This is my Corey ASMR. What's up, Isaiah? How you doing? Just move on. Well, the earnings call starts in, like, 13 minutes, so that's what we'll move on to when it starts. Not like the earnings call is very entertaining. I mean, to me, our conversation is more entertaining than the earnings call, but obviously other people don't really like it, I guess I just don't see the vision that you see, I suppose. And also, why does it have to be glasses as well? If that technology already exists, like what benefit does it being in glasses have over just using the camera on your phone? That's also, something I haven't brought up yet. But why would glasses be any better than the phone, to be fair? Ah, music. Crowdstrike. Tried the sale of hardware. I mean, what's the point of driving sales if it's not profitable, though? What if you buy a bunch of glasses nobody wants, like Apple Vision Pro, for example? What happens when you put a bunch of money into something like that and nobody wants it? Like, is sales really that important for a potentially bad product? I don't know. I don't know. I think that goes back to the why people talk so much shit on GameStop is because their revenues are declining. Like, revenues don't equate a good business. Revenues are pretty useless if you're not making profit. And who knows, maybe Apple Vision Pro is profitable. I don't know. Like, I haven't really researched it, but I really doubt it. Apple Vision Pro was trash. It's a trash product. It's an interesting idea, but like, nobody wants a fucking Apple Vision Pro. Nobody wants that shit. I think Apple is the wrong company to make glasses, but you think GameStop's the right company to do it? Apple, the largest company in the world that has proven themselves in the technology space time and time again. You think Apple is the wrong company, but you think GameStop's a good company to do it? Who's never done anything like that before? Like, see, that doesn't make sense at all, actually. Apple's the only company that makes sense to do it. I'm not suggesting that GameStop should become a manufacturer. Well, then I don't. I guess I just don't understand what your point is, I suppose. But selling a product in a store is completely different. That's again another conversation. If someone just makes a product and GameStop starts selling it, like, that's a totally different conversation, I think. But I guess this conversation is definitely going off the rails now. Now I'm confused on what the point is. I was a little bit confused before. I kind of understood, but now I'm totally confused. And yeah, I don't think it's worth elaborating on it anymore at this point. Earnings call starts in 5 minutes, so I mean, if you have another point, make it in 5 minutes. But once the earnings call starts, I'm not gonna be talking, obviously. I usually don't talk during the earnings call. People just get butthurt. So I try to give them what they want. Even though obviously nobody cares about CrowdStrike. There's nobody here for this. Later, Moose. Have a good one, bro. I'll catch you tomorrow. What does this do? Oh, nothing. I thought it would bring up like a little profile of all these people, but I guess not. It does nothing. I guess the last thing I'll say about that, because I want to say one more thing, is when you're building a product, you're supposed to build a product that solves a problem for someone. You know, you create a solution for someone's problem or a mass majority of people's problem. I just don't see how, like, that's a problem. You know, I just don't see the solution there for the potential problem of not knowing the value of what you have. There's no problem there. Like, there's no barrier to look it up. There's nothing. So, like, there's also just no, you know, you could make the product, but if there's no like, if it's not providing a solution for people, it's never gonna sell. And that's the last thing I'll say about that, I think, unless something else comes up. But that's a big key as far as product goes. Power packs needs inventory. I disagree. I disagree. Have you ever looked at PSA's eBay account? PSA PSA. PSA has, wait, let's see, where's it? Sale? Nope. Where's their thing? Doesn't tell you the how many items anymore. See all. PSA has 290,000 plus results. Search all, 293,288 items. I don't think there's an inventory problem there. I don't think there's an inventory problem there. 3.9 million submissions from GameStop alone this last year. Lost of cards have no sales for PSA 5 of a given card. Grading services become more reliable and of higher quality and then more submissions. I don't know what you're trying to say, straight up. I don't know what you're trying to say. The reason why the thing, what I said was the reason. I think this is starting. What I said was GameStop's able to buy back a worthless card because they know they're going to be able to sell it again through power packs and they're going to make their money back. But I don't know what you're trying to say, straight up. Wasn't your point earlier? Lots of cards have no sales for PSA 5 of any given card. Grading services become more reliable and of higher quality the more submissions it sees. I'm confused by that. I'm confused by that. I'd imagine most people keep their cards, but I think this is starting. Hello? What's going on here?
Please go ahead.
Oh, there we go.
Thank you.
Good afternoon, and thank you for your participation today. With me on the call are George Kurtz, Chief Executive Officer and founder of CrowdStrike, and Bert Podbear, Chief Financial Officer. Before we get started, I would like to note that certain statements made during this conference call that are not historical facts, including those regarding our future plans, objectives, growth, including projections, and expected performance, including our outlook for the first quarter and fiscal year 2027, and any assumptions for fiscal periods beyond that, are forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. These forward-looking statements represent our outlook only as of the date of this call. While we believe any forward-looking statements we make are reasonable, actual results could differ materially because the statements are based on current expectations and are subject to risks and uncertainties. We do not undertake and expressly disclaim any obligation to update or alter our forward-looking statements, whether as a result of new information, future events, or otherwise. Further information on these and other factors that could affect the company's financial results is included in the filings we make with the SEC from time to time, including the section titled Risk Factors in the company's annual and quarterly reports. Additionally, unless otherwise stated, excluding revenue, all financial measures disclosed on this call will be non-GAAP. A discussion of why we use non-GAAP financial measures and a reconciliation schedule showing GAAP versus non-GAAP results is currently available in our earnings release, which may be found on our investor relations website at ir.crowdstrike.com or on our Form 8K filed with the SEC today. With that, I will now turn the call over to George.
Thank you, Andy, and thank you all for joining CrowdStrike's Q4 FY26 earnings call. I couldn't be more pleased with our results. AI is driving elevated demand for the Falcon platform and is a key accelerant for our business. At the same time, AI is weaponizing adversaries to attack with increased speed, sophistication, and precision. We're seeing this play out in real time in the Middle East as emboldened adversaries fuel nation-state activity. FY26 was CrowdStrike's best year yet, capped by a blockbuster Q4 where we set new records across the business. Summarizing our results: 1. All-time record net new ARR of $331 million for the quarter, which grew 47% year over year, coming in well ahead of our expectations. For the year, we delivered $1.01 billion in net new ARR, up 25% year over year, our first year delivering over $1 billion of net new ARR. 2. Ending ARR of $5.25 billion, crossing the $5 billion milestone, which accelerated to 24% growth year over year. CrowdStrike is the fastest and only pure-play cybersecurity software company to achieve this milestone. 3. Record free cash flow of $376 million for the quarter, or 29% of revenue, And for the year, we delivered record free cash flow of $1.24 billion, or 26% of revenue. 4, all-time record operating income of $326 million for the quarter, or 25% of revenue. This is the third consecutive quarter of record operating income. For the year, we delivered $1.05 billion of operating income, exceeding the billion-dollar operating income milestone for the first time. 5, record net new ARR from cloud, next-gen identity, and next-gen SIEM collectively. Ending ARR for these solutions collectively grew more than 45% year over year. Amidst today's AI backdrop, our endpoint business accelerated for the second consecutive quarter. 6, dollar-based net retention of 115% and gross retention of 97%, showcasing best-in-class durability and stickiness, which leads to my final point. 7, we delivered $1.69 billion in ending ARR from accounts that have adopted the Falcon Flex subscription model, growing more than 120% year over year, turbocharging our land and expand motion. Our Q4 and FY 2026 execution showcases CrowdStrike's leadership in every theater, every segment, and every route to market. In our third consecutive quarter of net new ARR acceleration, the voice of the market is clear. CrowdStrike is durable, mission-critical infrastructure for both securing AI and accelerating global AI adoption. We find ourselves in one of the most defining times in the history of modern technology. AI has gone from DreamWorks to reality, now increasingly in production across the enterprise. From CrowdStrike's founding, we've been building AI innovation for cybersecurity. Yet the pace of AI innovation is broadly misunderstood. Novel discoveries are often interpreted as the death knells of existing categories. The market is questioning enterprise software's role in an agentic world. It's in moments like these where opportunity is created. In the same way that we anticipated the cloud revolution, we pioneered and built for the agentic revolution. Here's what I see unfolding in the market. We see the AI revolution creating two disparate groups of software companies. Group 1, those who are now existentially vulnerable. These are historically nice-to-have technologies that are productivity features and point products geared to legacy pricing models. Group 2, those who will thrive. These are mission-critical, trusted infrastructure technologies necessary for global continuity with deep IP. These technologies are net data creators, producing novel, fresh, and proprietary data that doesn't exist elsewhere. Data that is fuel for the agentic business outcomes. In these companies, proprietary data is just one part of the advantage. The other is trusted enterprise architectural superiority, which drives stickiness, adoption, and scale. Here's why CrowdStrike is winning and how AI is driving even more competitive success for us. 1, our competitive moat is becoming an opportunity ocean. Falcon is a vertically integrated net data creator and third-party data aggregator. We generate real-time data that no one else has from customer environments and our world-class threat intelligence. What Frontier AI Labs cannot do, we've been doing for over a decade. Cyber reinforced learning from human feedback, or RLHF, at scale. Our MDR analysts, threat hunters, and incident responders produce expert-labeled data as a byproduct of operations. These labels don't come from internet text. They come from stopping real breaches in real time. Threat Graph correlates more than 1 trillion security events per day across approximately 2 trillion vertices, analyzing 15 plus petabytes of data, structured, queryable, security signals at scale no one can replicate. Frontier models can augment security, summarize alerts, draft queries, speed up triage. That's extremely valuable, but stopping breaches requires sensors, real-time telemetry, continuous expert validation, and enforcement. A closed-loop system, not a text model. As our technology evolves, our data improves. As our data improves, our platform evolves. As our experts validate outcomes, our AI agents get better. This is a flywheel and network effect that no one else has in cybersecurity at our size and scale, and it's how we stand behind our brand promise of stopping breaches. This dynamic is not cyclical, it is structural. 2, we win because Falcon is purpose-built for securing AI at every layer. The layers of the new AI stack are the attack surface of the future, and Falcon can secure all of them. AI must be secured at every level, including 1. GPU foundation, partnering with NVIDIA, AMD, Intel, and others to secure AI at the source. 2. Hardware and infrastructure OEMs, securing AI factories such as Dell, HPE, and Supermicro, and novel AI operating systems such as Vast Data. 3. Neoclouds and hyperscalers, securing where AI happens in the cloud across AWS, OCI, GCP, Azure, and inference disruptors such as CoreWeave, Nebius, and Caruso. 4. Token factories, securing the use of frontier model creators like Anthropic, OpenAI, and Google Gemini. And 5. AI applications and agents, securing AI native software and the agentic workforce. Not only do we secure the use of each of these companies' products, but we also secure nearly all of the companies themselves. We secure the world's AI future by securing the world's AI leaders. And 3, we win because efficacy and precision matter more than ever. In cybersecurity, you simply cannot have a hallucination. You can't prompt twice. It's first time final. It's the difference between thwarting an adversary or experiencing a breach. Cybersecurity is a unique paradigm. Success for us and our customer is, did we stop a breach? We win because cybersecurity needs to be faster and more deterministic than ever before, and we uniquely deliver superior outcomes. Our agentic SOC and AI technologies are transforming security. CrowdStrike's AI innovation is setting new adoption standards on the journey to delivering security AGI. Charlotte is our flagship agent, and now we have 10 other agents representing specific security skills and roles within security teams. Between Charlotte and our other agents, we can already see the mobilization of security's agentic workforce working hand in hand with human security professionals. Coming back to Charlotte, our agentic SOC workforce built from multiple models, allowing us to optimize from the latest and greatest LLMs. We couple industry innovation with our own AI expertise, training and models from security's richest data source, Falcon adversary, threat, and security analyst training data. We saw Charlotte usage soar more than 6x year over year as ARR more than tripled. A thematic win was in a leading cloud software provider in an 8-figure Reflex transaction. The Reflex expanded the adoption of Next-Gen SIEM and Charlotte. Their 30-day use of Charlotte tells a compelling story, achieving a 3x faster mean time to respond. Using the power of our domain-specific AI, Charlotte accelerates, streamlines, and democratizes security outcomes. Technology innovation is just one part of our success. Our results are also driven by our go-to-market innovation, creating the revolutionary Falcon Flex subscription model, which we now see mimicked across cybersecurity. The model transformed our discussions with customers to demand planning based on risk, data, attack surface, and overall platform capabilities. Let me share our Q4 Falcon Flex performance within the now $1.69 billion ending ARR cohort of Flex account value, growing greater than 120% year over year. We now have more than 1,600 customers who have adopted Falcon Flex and added more than 350 Flex customers in Q4. That amounts to nearly 4 new Falcon Flex customers each day of the quarter. The average Flex customer's ending ARR is greater than $1 million. The proof of Falcon adoption success is in the Reflex. Customers are using what they buy and expanding their Flex commitments. More than 380 Flex accounts have already reflexed, representing more than 23% of the Flex customer base, up from 5% in Q1. The average ARR lift after a reflex is 26%, happening on average within 7 months. And the platform adoption grows even further from there. We're now tracking the number of customers who are repeat reflexers. Nearly 100 customers have reflexed multiple times. The multiple time reflex cohort now represents approximately 6% of total Flex customers and over a quarter of all reflex customers. Our multiple time reflexers on average have an ARR lift of an additional 48% from their initial Flex subscription. In summary, Falcon Flex unlocks never seen before adoption for customers. Flex is now how we go to market. A key win includes a major enterprise software player that started with using one module, threat intelligence, and spending low 6 figures. Through Falcon Flex, this customer is now using 25 modules and spending $86 million in total Flex contract value with us. Flex is creating its own flywheel. Demand drives use, use drives more demand. Flex is the stage on which our platform solutions shine. Collectively, our next-gen identity, cloud, and next-gen SIEM businesses grew more than 45% year over year, reaching more than $1.9 billion in ending ARR. Our next-gen identity business ended FY26 with more than $520 million of ending ARR, growing more than 34% year on year, a double-digit acceleration versus 2 quarters ago. Key drivers include our privileged account security solution, which grew more than 170% sequentially. Falcon Shield ending ARR grew more than 300% year over year, more than 5x since our acquisition of Adaptive Shield, as customers protect the rapidly growing agentic SaaS attack surface. Our ability to secure both human and agentic identities wherever they exist is rapidly turning CrowdStrike into our customers' identity secure control plane. A key identity win: an iconic department store selecting CrowdStrike over an SMB point product in a 7-figure deal driven by the ease of use of our ITDR and PAM solutions in a Flex consolidation. While our next-gen identity business had an excellent quarter, we're most excited for what's ahead. We recently closed the acquisition of Signal AI. This is SGNL, bringing the power of zero standing privilege for all identities to the Falcon platform. With Signal AI, CrowdStrike is delivering high-fidelity, context-driven, real-time authorization to the market, enabling our customers to rapidly reduce their identity attack surface, even as they rapidly expand the number of identities within their organization. We're moving access from static point in time to real-time and redefining zero trust. Access should be always on, granular, and dynamic. But we're not stopping there. Our recent acquisition of Seraphic turns any browser into a secure enterprise browser without impacting user behavior. The browser has become the front door for AI applications, and Seraphic meets human and non-human users where they are and where they're going, agentic browsers for real-time visibility and protection. Turning to our cloud business, where net new ARR growth accelerated for the second consecutive quarter, and ending ARR grew more than 35% year over year. For the first time, our cloud business exceeded $800 million in ending ARR as our customers look to us to secure the infrastructure powering their AI future. Our unique ability to operate in runtime at scale continues to set us apart from the rest of the market. A key win in our cloud business was with a major enterprise data platform company who deployed Falcon Cloud Security in an 8-figure total deal value Flex. After extensive testing, this account ripped out their existing provider for our runtime protection first approach, realizing the integrated benefits of CSPM, CIEM, CDR, and Overwatch threat hunting, which resulted in a 90% reduction in mean time to detect and respond for their cloud environment. Turning to our next-gen SIM business, where we delivered a record quarter. Our next-gen SIM business grew over 75% year over year, delivering ending ARR of more than $585 million. Next-gen SIM has proven itself a scaled market disruptor, where our performance and cost advantages set us apart from legacy competitors. At the same time, our launch of agentic security workflows is powering the cybersecurity operating system of the future. With Falcon Onum, we're enabling our customers to connect data sources quickly and efficiently, resonating with both security and IT teams. A key win in the quarter was with a Fortune 500 retailer, highlighting our strength and momentum in the next-gen SIM space. In this seven-figure deal, we replaced the legacy SIM and its attached point product data pipeline. Falcon's fully native data pipeline and an expected 80% faster query performance was a game changer in helping this customer build out their agentic SOC. Rounding out our product portfolio, I want to touch on our endpoint and other AI-specific businesses. Amidst the backdrop of accelerating AI proliferation, our endpoint business accelerated for the second consecutive quarter. The endpoint is rapidly becoming the epicenter of AI usage, driven by the growth of technologies ranging from MCP servers to coding tools to localized LLMs. AI is the fastest growing attack surface on the endpoint. As of Q4, our sensors detected more than 1,800 distinct AI applications running on enterprise devices, representing nearly 160 million unique application instances across our customer base. And with the acquisition of Seraphic, we now give our customers even more control over their knowledge workers' usage of AI tools. Lastly, I want to touch on our recently launched AIDR offering. In just a short time, AIDR has become one of our most in-demand products, growing more than 5x versus last quarter, despite having only been available for a few weeks. AI adoption is moving faster than can be controlled, and our AIDR offering gives customers immediate visibility into their employees' usage of AI tools, including the specific models being used, as well as detections into potentially malicious or non-compliant usage. Bringing model scanning, visibility, guardrails, and detections to AI usage positions CrowdStrike as a catalyst for enterprise AI adoption. Concluding the discussion on our platform solutions, seeing is believing. Please reference our investor deck, which now includes a link to product demo videos showcasing AI innovation across the Falcon platform. Our partner go-to-market delivered beyond expectations this past year. We saw growing practices across EY, Accenture, Deloitte, HCL, Wipro, KPMG, and Infosys taking shape focused on next-gen SIM migrations. Our MSSP business also continues to grow at a rapid pace. In just over 3 years, we've gone from a sub-$100 million MSSP business to more than $1.3 billion, spanning market-leading partners like Kroll, Pax8, and NinjaOne. Finally, our hyperscaler leadership continues to differentiate CrowdStrike from every other cybersecurity player. This past year alone, we did nearly $1.5 billion of total contract value on the AWS marketplace, growing nearly 50% year over year. Then, a few weeks ago, Satya Nadella and I spoke to CrowdStrike's go-to-market team together. We are now open for business on the Microsoft Marketplace, and customers can use their Microsoft Azure consumption commitment dollars on Falcon. This is a watershed moment reflecting a clear evolution of how our companies see each other and how Microsoft and CrowdStrike are working together to make the world a safer place. In summary, we didn't just have a great partner year, we built an ecosystem to win the next decade. Closing my remarks today, I'm proud of the team and our partners for executing a terrific FY26. Here are my key takeaways as I look at the business today and into the future. First, CrowdStrike is an AI adoption accelerator. Our customers are safely and securely using more than 1,800 distinct AI applications on their endpoints, which would not be possible without CrowdStrike. Second, AI use necessitates AI security. Every enterprise deploying AI needs an independent protection layer for visibility, compliance, and enforcement. As AI adoption grows, CrowdStrike becomes even more of a necessity to these organizations. And third, our data moat creates a structural advantage. Delivering cybersecurity at scale requires more than a prompt. It requires expert label telemetry from our global sensors, MDR analysts, and elite incident responders. It is a structural advantage no LLM provider can replicate. In addition, agentic cybersecurity requires inline prevention as well as real-time remediation. Since the founding of CrowdStrike, we created an AI-native platform. Enterprises have trusted us to help them safely navigate market transitions like digital transformation and cloud migration. The AI revolution is now upon us, and just like prior market transitions, adoption of AI will be secured by CrowdStrike. Thank you for your trust. I'll now turn the call over to Burt Podbere, CrowdStrike CFO.
Thank you, George, and good afternoon, everyone. As a quick reminder, unless otherwise noted, all numbers except revenue mentioned during my remarks today are non-GAAP. We delivered exceptional fourth quarter results and a record finish to the year, exceeding expectations across all guided metrics, driven by continued flex and reflex momentum and strong organic growth across the platform. FY26 was a milestone year for CrowdStrike. For the full fiscal year, ending ARR growth accelerated to 24% and net new ARR accelerated to 25% year over year. We delivered this record top-line performance while exceeding our profitability and free cash flow targets. Operating income reached a record $1.05 billion, or 22% of revenue, and we delivered record free cash flow of $1.24 billion, or 26% of revenue. The combination of growth, scale, profitability, and cash flow puts CrowdStrike in rare air. The strength of our platform and the significant market opportunity ahead further reinforce our conviction in the path to achieving our future growth milestones of $10 and $20 billion of ending ARR, as well as our target profitability model. Our full-year momentum was punctuated by an exceptional fourth quarter. We achieved record net new ARR of $330.7 million, up 47% year over year, and well ahead of our stated expectations, driving ending ARR to $5.25 billion. Our fourth quarter results showcase the success of our flex-led go-to-market strategy. Momentum was broad-based across customers of all sizes, from enterprise to down-market and MSSPs, achieving another record quarter in our corporate business. Customers continued to leverage Falcon to consolidate their security needs and lower their total cost of ownership, resulting in higher retention rates over the prior quarter and strong module adoption rates. As of Q4, 50% of subscription customers are now using 6 or more modules, 34% are using 7 or more, and 24% are using 8 or more modules. Our gross retention rate remained high at 97%, and our dollar-based net retention rate increased to 115% in the quarter. At our more than $5 billion ending ARR scale, these retention rates highlight the durability of our customer relationships and our ability to both retain and expand our customer base. Our strong business momentum and Q1 record pipeline entering FY27, which grew 49% year over year, gives us conviction in our ability to deliver profitable growth throughout FY27 and beyond. As we lapse the one-year mark from the end of our highly successful CCP program, we have seen that accounts that took CCP deals have gross and net retention rates higher than the company average, have shown a strong trend of early renewal, and have already expanded more than twice the total $80 million of ARR value we provided. Moving to the P&L, total revenue exceeded our guidance range and grew 23% over Q4 of last year to reach $1.31 billion. Subscription revenue grew 23% over Q4 of last year to reach $1.24 billion, and professional services revenue remains strong at $63.1 million, up 26% year over year, driven by the elevated threat environment. The geographic mix of fourth quarter revenue consisted of approximately 66% from the US and 34% from international geographies, with both EMEA and APAC year-over-year revenue growth accelerating compared to Q3. We saw broad strength across all our major geographic markets, with the US, Japan, Europe, the Middle East, and Africa all exceeding expectations. Total Q4 non-GAAP gross margin was a record 79%, and Q4 non-GAAP subscription gross margin was a record 81% of revenue, primarily as a result of continued cloud optimization. Fourth quarter non-GAAP operating income was a record $325.8 million, and non-GAAP operating margin was 25%, exceeding our guidance. The outperformance was driven by our strong top-line performance, gross margin improvement, and sales execution, underscoring our commitment to durable, profitable growth as we continue to balance strong net new ARR growth and operational excellence. In Q4, we delivered positive GAAP net income attributable to CrowdStrike of $38.7 million. Non-GAAP net income attributable to CrowdStrike was a record $289.1 million, or $1.12 on a diluted per-share basis, exceeding our guidance. Moving to cash, our cash and cash equivalents increased to $5.23 billion. We generated record cash flow from operations of $497.9 million and record free cash flow of $376.4 million, or 29% of revenue. Our FY27 outlook reflects our confidence in the durability of CrowdStrike's growth trajectory, profitability expansion, and cash flow generation. The fundamental tailwinds, platform consolidation, AI proliferation, and flex adoption are continuing to gain momentum. As George mentioned earlier, we see the AI revolution creating two disparate groups of software companies. One, those who are now existentially vulnerable, and two, those who will thrive. CrowdStrike is thriving amid the AI revolution, as we not only leverage AI within our entire platform, but our platform helps organizations adopt AI safely and securely. The AI revolution represents a new and generational growth opportunity for CrowdStrike, as accelerating AI adoption necessitates security built for this next era of technology. As AI adoption accelerates, combined with our record Q1 pipeline and continued platform consolidation momentum, we have strong conviction to once again raise our FY27 ARR outlook. The outlook we are providing today includes the acquisitions of Signal and Seraphic, both of which closed in February and are expected to contribute a combined $5 to $8 million of acquired net new ARR in Q1. We are assuming minimal organic contribution from these acquisitions in the remaining quarters of FY27, as we remain committed to natively integrating their capabilities into the Falcon platform before fully scaling go-to-market, consistent with our proven M&A strategy and brand promise. We expect FY27 net new ARR seasonality to remain unchanged relative to FY26, with approximately 41% in the first half and 59% in the second half. Beginning in Q1, we are changing the sales commission amortization expense period from 4 to 5 years to reflect our longer customer relationship periods. We expect this change to benefit non-GAAP operating income by $85 to $95 million in FY27, partially offset by additional operating expenses resulting from the integration of our recent acquisition of Signal, Seraphic, Onum, and Pangea of $74 to $80 million. For a detailed breakout of the acquisition impacts to our guidance, please refer to the guidance slides of our Q4 FY26 earnings presentation, available at ir.crowdstrike.com, following our prepared remarks today. Additionally, we remain confident in our previously provided assumptions for FY27 partner rebates to represent approximately 0.8% of total revenue. Moving to interest income, based on expected market rates and cash outlay from our recent acquisitions, we are assuming interest income of $160 to $170 million for FY27. Moving to cash, at the midpoint of our guidance, we expect free cash flow margin to be approximately 33% in Q1 and at least 30% for the full fiscal year. In FY27, we expect the seasonal mix of free cash flow dollars between the first and second half of the fiscal year to be 43% in the first half and 57% in the second half, with Q2 remaining our seasonally lowest quarter. We anticipate capital expenditures as a percentage of revenue to be 7 to 8% in FY27, with these investments more weighted to the first half of the year. Finally, as of March 2nd, we repurchased approximately 144,000 shares following our fiscal year end and had approximately $950 million remaining under our current share repurchase authorization. We will remain opportunistic in returning capital to shareholders as we remain focused on capturing the significant growth opportunities ahead of us. For the first quarter of FY27, we expect annual recurring revenue to be in the range of $5.502 to $5.504 billion, inclusive of the estimated acquired ARR and reflecting a year-over-year growth rate of 24%, translating to net new ARR of $249 to $251 million, reflecting a year-over-year growth rate of 29 to 30%. We expect total revenue to be in the range of $1.360 to $1.364 billion, reflecting a year-over-year growth rate of 23 to 24%. We expect non-GAAP income from operations to be in the range of $308 to $310 million, and non-GAAP net income attributable to CrowdStrike to be in the range of $275 to $277 million. We expect diluted non-GAAP net income per share attributable to CrowdStrike to be approximately $1.06 to $1.07, utilizing a 21.0% tax rate and weighted average share count of approximately 259 million shares on a diluted basis. For the full fiscal year 2027, we expect annual recurring revenue to be in the range of $6.466 to $6.516 billion, reflecting a year-over-year growth rate of 23 to 24% and translating to net new ARR of $1.213 to $1.264 billion, reflecting a year-over-year growth rate of 20 to 25%. We expect total revenue to be in the range of $5.868 to $5.928 billion, reflecting a growth rate of 22 to 23% over the prior fiscal year. Non-GAAP income from operations is expected to be between $1.422 and $1.462 billion. We expect fiscal 2027 non-GAAP net income attributable to CrowdStrike to be between $1.241 and $1.271 billion. Utilizing a 21.0% tax rate and approximately 260 million weighted average shares on a diluted basis, we expect non-GAAP net income per share attributable to CrowdStrike to be in the range of $4.78 to $4.90. George and I will now take your questions.
Thank you. If you would like to ask a question, please click on the Raise Hand button, which can be found on the bar at the bottom of the Zoom window. You may remove yourself from the queue at any time by lowering your hand. When it is your turn, you will hear your name called and receive a message on your screen notifying you that you may unmute yourself. In the interest of time, participants will be limited to one question. Our first question comes from Joe Gallo at Jefferies. Please unmute your line.
Hey guys, thanks for the question. Really nice results and guide. George, securing AI is a huge market opportunity. Would love your thoughts on one, when securing AI materializes to ARR meaningfully for you. Is that a fiscal 27 story? And then two, how much of the new market opportunity goes to pure play cyber vendors? In cloud, people certainly use the hyperscalers for some of their security needs, So just curious how much of that new AI market goes to pure play cyber vendors like yourselves. Thank you.
Yeah, thanks, Joe. Obviously, we're still in the early innings, but we continue to ramp in protecting AI. I mean, it's happening today in terms of ARR growth. And we're obviously blown away of what we've seen with Pangea and AIDR. It was up 5x quarter over quarter from when we acquired the company. So we're really excited about that. The other piece to keep in mind is that not only is it going to drive AIDR growth, but we're going to see growth in protecting attack surfaces like cloud. We're going to see growth in next-gen SIM. We're going to see growth in other areas that all touch AI. So from that standpoint, as I said, early innings, but lots of opportunity for us. And I think with regards to hyperscalers, I'm glad you asked the question, because when I started the company in 2011, we pioneered cloud-delivered security. And over the years, as cloud was maturing, I heard a lot about the hyperscalers actually providing all the security services. Well, that didn't happen. In fact, as you've seen with our results and our partnership with AWS as an example, we transact billions through these platforms, and they're a great partner. And there's a lot more exposure in the cloud. So we see the same thing happening, what I call AI hyperscalers, being able to actually partner with these hyperscalers, leveraging AI and their LLMs, and also being able to leverage the technology to provide better outcomes within the platform of record for our customers, which is Falcon.
Thanks, Joe. Operator, next question.
Our next question comes from Rob Owens at Piper Sandler. Please unmute your line.
Great. Thank you for taking my question. And George, you talked about the 10 other agents that you guys have besides Charlotte and some of the traction that CrowdStrike's seeing with these security agents. But can you provide color on some of the recent acquisitions? When we look at agentic security more broadly, where are customers in their journey? And do you see identity as maybe one of the main hurdles for them getting agentic deployments at scale? Thanks.
Yeah, Rob, identity is one of the biggest threat vectors right now that we see. In fact, one of our latest threat reports, 80% of the breaches are non-malware based, right? So a lot of it is around identity. And between the identity stack that we've built over the years, again, we got into identity security in 2020. We built that out. It's a big business. And now really with the addition of Signal AI, this is, in my mind, game-changing technology. To have zero standing privileges, to be able to protect non-human identities and human identities in a much more modern stack than anything else that's out there in the market. It's a perfect fit to CrowdStrike and our platform. You combine that then with something like Seraphic in browser security. So now you're able to protect the front door of really where these attacks happen, plus where AI takes place. And you add the identity layer to that. And again, we're providing something that we think is going to be very unique in the industry. And of course, Pangea, which is our AIDR product. When you look at EDR, in today's market, EDR is a must. It's a compliance mandate. And we believe that EDR will be a similar opportunity. AIDR will be a similar opportunity to EDR in the coming years, driven by compliance and the need to accelerate protecting AI.
Thanks, Rob. Operator, next question.
Our next question comes from Fatima Boolani at Citi. Please unmute your line.
Good afternoon. Thank you for taking my question. George, I wanted to direct this to you. Had a question about the next generation SIM opportunity. There are very much percolating fears that the open-ended SOC modernization share capture opportunity that had thus far been pretty open-ended is perceived to maybe be at more risk from what the frontier labs may or may not be pursuing. So maybe in the context of the opportunity ocean commentary in your prepared remarks, can you help us with a deeper explanation and understanding of what your current nature of relationship, partnership, and integration is with the frontier labs and the frontier models? And how should we very critically think about the durability of your moat from any potential commoditization from an architectural or technical or frankly any other relevant contextual standpoint? Thank you.
Yes, great question. So when you look at what we've built, and I talked about this in the prepared remarks, we're a net data creator, right? We have telemetry that we create from our agents and from other parts of our platform that is unique. We put it into various data stores, including NextGen SIM and our threat graph, and we're able to understand the threats in real time with real-time prevention. That's vastly different than what the LLM providers and frontier models do. Now, certainly, we leverage the frontier models. We have our own small language models. We have our own curated data. So I think we get the best of both worlds, but we're doing this in a platform that is driving consolidation, that we've got millions and millions of workflows on already, and it becomes very, very sticky. So from the standpoint of our next-gen SIM, you've got to look at the next-gen SOC opportunity and what we're doing with Charlotte and the agents that we've created, where we're driving meaningful change in the SOC. We're overall driving down costs and getting better outcomes, and we're doing it in a compliant way. To be a security vendor, you have to have trust. Customers are driven by compliance, and we are the epicenter of creating this data. So what we also are open to is having an open model. We have customers that create their own agents, that leverage our technologies, that leverage our MCP services, and this is part of having an open platform, which is why our customers love CrowdStrike.
Thanks, Fatima. Operator, next.
Our next question comes from Saket Kalia at Barclays. Please unmute your line.
Okay, great. Hey guys, thanks for taking my question here. Great finish to the year. George, maybe for you, the cloud security business, I think is the biggest piece of kind of that three platform product group, if you will. And it's continued to add a consistent amount of net new ARR dollars over the last few years, which has been great to see. Maybe the question is, how do you see the competitive environment in cloud security right now? And how do you think about the longevity of the growth in that market as you look out into the future?
Well, when we look at the cloud market, I couldn't be prouder of our execution and the products that we brought to market. One of the areas that we focused on, as you know, for a long time is runtime protection. And that's the technology that really is focused on stopping breaches. And I think customers have realized just by having the ability to understand sort of exposures doesn't mean you're going to stop the breach. So with our CSPM technology, with a lot of the other technologies that we have acquired, like Falcon Shield, it has become an extremely potent offering for our customers. And again, why is it resonating? One, the technology works. Two, it all works together, and we're able to drive down cost, complexity, and get a better outcome, which is stopping the breach. It's not just about reporting on some exposures. It's about understanding the overall control plane in the cloud and being able to protect it. And we're giving the customers what they want, and that's the right outcome at a much lower cost than the competitors that are out there. So I think that's why, in a nutshell, you're seeing the results in our cloud business.
Thanks. Operator, next question.
Our next question comes from Brian Essex at JP Morgan. Please unmute your line.
Great. Good afternoon. Thank you for taking the question, and congrats on some nice results. And Burt, congrats on the return to GAAP profitability. Really good to see. Maybe a quick question for you, George, on identity. Great to see the acceleration there. Could you unpack that business a little bit and help us understand? I mean, obviously, identity was one of the segments that was part of the CCP incentive plans that you guys were pursuing. How much of the resurgence in growth there on the identity side is I guess renewal of CCP or flex deals versus net new kind of emerging identity product? Would be great to get a feel underneath the covers there.
Well, it's one of the modules everyone wanted, and certainly was a fan favorite in the days of CCP. So, we're seeing success from that. And as I have mentioned many times, once a customer engages with a module, there's an extremely high percentage that they're going to continue to renew that. So we continue to see that. But I think overall, you have to look at the threat landscape and the fact that identity is really one of the, compromised identity is really one of the number one drivers of breaches. And customers are being are focused on being able to protect those identities both in the cloud and on premise, if you will. and there's a massive compliance need for something like ITDR. So we're getting the benefit from the platform consolidation piece, and we're also getting the benefit from having a very mature stack now. Not only can we prevent these sort of breaches with ITDR, but you include now Falcon Shield, protecting SaaS identities. And then you kind of look at what we've done with, our PAM offering. It's been very, very well received by our customers. So I think that's why you're seeing our opportunity continue to grow there. And as I said earlier, we couldn't be more excited about the Signal AI acquisition that we just completed.
Thanks, Brian. Operator, next question.
Our next question comes from Brad Zelnick at Deutsche Bank. Please unmute your line.
Great. Thanks so much for taking the question. George, Bert, congrats on a really strong finish to the year and impressive ARR guidance out of the gate for next year, implying 22.5% net new growth, which is above your prior commentary and now off of even a higher base. After such a strong fiscal 26, this obviously stands out in a very good way. Can you talk about the building blocks that get you there, and especially how to think about the renewal opportunity that you have visibility to and the expansion opportunity, given just how much you can address today versus when many of those customers might have last transacted? Thank you.
Hey, Brad, thanks for your comments, and I'll give you an insight into how we thought about, the guide. I mean, first and foremost, it starts with the strong momentum that we're seeing in the business. We saw in Q4 broad-based demand from all sizes of businesses, from all business sizes, whether it was enterprise all the way down to MSSPs. And then that rolled over into Q1 when we talked about the record Q1 pipeline, which grew 49% year over year. Then, as George mentioned, CrowdStrike is thriving in this AI revolution. We are not only leveraging AI within the entire platform, but our platform also, helps organizations use AI securely, and that's the key. And then I think we're still benefiting from the consolidation tailwinds. Customers continue to seek the best outcomes, at the lower TCO, which we're helped to provide. And the consolidation really comes from, the strength of our platform. You look at cloud, next-gen identity, and next-gen, SIM collectively. We posted a record net new ARR, resulting in $1.9 billion in ending ARR, up 45% year over year. And look at endpoint; it accelerated for the second straight quarter on the heels of AI-driven demand. And then you tag onto that the success that we saw in Flex. We added over 350 Flex customers in Q4. The average Flex customer ending ARR that was over $1 million, those guys have adopted nearly 10 modules, well over our company average. And then Reflex. We have greater than 380 Reflex customers. The average time for a Reflex is 7 months. 100 customers Reflex multiple times, with the average ARR lift post-Reflex for this cohort was 48%. These are really, really great numbers for us. And so you combine all those things and other things, gave us the confidence to be able to come out with the guide that that we came out with for net new ARR for next year.
Great, thanks. Next question, please.
Our next question comes from Matt Hedberg at RBC. Please unmute your line.
Great. Thanks for taking my question, guys. Congrats from me as well. George, I wanted to ask about pricing. Obviously, Flex and Reflex is doing extremely well, but there's obviously a lot of concerns that I think we're all seeing out there about potentially fewer knowledge worker seats in the future due to AI. The flip side to that is way more agents. So I guess two-part question. First, how do you think about agent pricing? And second, how well does Flex position customers for this potential mix shift? And could consumption become a bigger element to the growth algorithm?
Well, when we look at the overall threat landscape and how we go to market, obviously we protect endpoints and cloud workloads. You have to look at those in totality. But now we have the opportunity to protect AI agents. And industry stats is that each knowledge worker will have 90 AI agents. So even if the mix moves around, we have a massive opportunity to protect AI agents. We have a massive opportunity to protect all of these AI cloud workloads. And from what I've seen in different technology shifts, we tend to create more opportunity as technology advances, not less opportunity. So that's the way we would view that piece of it. In terms of Flex, look, it's been a smashing success. There's a reason why so many other companies sort of copied our model or tried to copy it. Customers like it. You can see the success in the numbers, and it just makes it so much easier to help customers very quickly. You look at the acquisitions we did; they were available immediately to customers as soon as the deal closed. And/or we went to a GA, but we didn't have to go through another procurement cycle. So that's really the model that we're leading with going to market this year, and we couldn't be more excited about it. And I think the Flex results speak for themselves.
Thanks, Matt. Operator, next question.
Our next question comes from Roger Boyd at UBS. Please unmute your line.
Great. Can you hear me okay?
Yep, go ahead.
Okay, great. George, I want to go back to your comments on why you're best positioned to benefit from AI SOC. And I appreciate your comments around your approach of tech plus human expertise and the flywheel that creates, giving you an advantage in terms of operationalizing this technology. I think it's also maybe the lowest friction way for some enterprises to benefit from some of this emerging tech. And I guess with that in mind, what sort of growth are you seeing with some of the managed service offerings like Complete and Overwatch relative to the acceleration you're seeing in the overall endpoint business right now? Thanks.
Yeah, those businesses continue to grow extremely well. And when you look at why, it's because we're getting the right outcome that customers need. One of the things that we track is mean time to detection, mean time to remediation. We're absolutely best in class for customers. Very difficult for them to replicate what we do. Why? Because it's the network effect, right? It's the full view that we see in over 176 countries where we actually have our software operating. So when you're at the tip of the spear in seeing the activity through our technology, the tip of the spear in responding to some of the biggest breaches in the world, combined with our threat intelligence, you've got the right understanding and the right DNA to create the right technology and outcome for customers. So that's what we continue to see. Obviously, they're leveraging our technology and we're providing the automation, but there are many, many customers who don't have the skills or expertise to get the outcomes that we provide, which is stopping the breach, identifying these sort of threats, remediating much faster than they ever could, and ultimately giving them the best outcome for a cost that it's very hard to replicate. And that's why it's been a fantastic success for us.
Thanks, Roger. Operator, next.
Our next question comes from Gabriela Borges at Goldman Sachs. Please unmute your line.
Hey, good afternoon. Thank you. George, I really appreciated your description on what LLMs are not, and as it pertains to the RHLF commentary. I want to ask you the opposite question. What do you think the role is of Anthropic in cybersecurity use cases, whether it's on the coding side or the pen testing side, or even the data aggregation side? What role do you think they should have? Thanks.
I mean, I guess I'll talk just in general terms for LLM providers. And they're certainly good at a lot of things. It can help sort through lots of data very quickly. And it's something that, the security industry and most security players are leveraging. In our particular case, we certainly leverage technology like that, but we've built our own bespoke models depending on the module and trained in a certain way with the vertical expertise to get the right outcome. Here's what you have to remember is that what customers want is real-time prevention. You have to be in line, you have to be able to get the data in milliseconds, and you have to make a decision. That's not the case with an LLM. There's many great things it can do, and it's certainly fantastic technology, but it's not stopping any breaches in real time. And that's one of the areas, I think, again, where we shine. So from my perspective, we continue to work with them, we continue to partner with them, and amazing technologies. And I think it really is going to be the better together approach, as the industry goes forward. Customers want to leverage their own models. We leverage Nemotron with NVIDIA. It's an unbelievable time to be in tech, and you're going to have agents talk to agents and our agents talking to customer agents that are, inside their network. But at the end of the day, as the platform system of record for security, this is where you want to be. It is a very sticky place. We create the data, we curate the data. And again, we want to be open and work with any of the models that are out there. And we want to meet our customers where they have AI and leverage their technologies as well as ours.
Great. Thanks, Gabriella. Operator, next question.
Our next question comes from Todd Weller at Stephens. Please unmute your line.
Yes, good afternoon. Appreciate the question. George, this is the second quarter of endpoint acceleration. Can you talk about what's driving that, how you think about the durability of the growth acceleration? And then related to this, there's been a lot of action in the market recently around browser security. Do you see that as a new category or as an extension of endpoint? Thank you.
Well, when you think about endpoint acceleration, it's a simple answer: AI. We've talked about it and we're showing it in the results. And I mean, one of the biggest things you look at, OpenClaw comes out, our customers immediately are looking at all of our technologies to be able to identify it, put controls around it, and make sure that they can leverage these technologies in an efficient and compliant way. So that's where AI meets the rubber meets the road, is at the endpoint, and that's how people consume it. So that's where we're seeing it. And then you combine that with browser security. That's really the front door now for how people are interacting with AI models and LLMs and the various technologies that are out there, as well as how threats get into the environment. So you combine that with our agent and the ability to have protection across any browser, not just ask an organization to switch their browser. We can protect any browser that's out there. We tie it into our identity stack. And I can tell you the feedback from our customers, as soon as we made the announcement, they were looking at how fast can we get this technology, because they know on our platform it's going to be additive for them. And we're excited about the category and the great company in Seraphic that we acquired.
Thanks, Todd. Operator, next question, please.
Our next question comes from Dan Ives at Wedbush. Please unmute your line.
Yeah, it's a great quarter as always. So George, I was going to say, when it comes to Anthropic and Claude, and obviously all the worries out there, and you hit it on the Q&A, to some extent, can't this also be a huge benefit to you as it just further spreads the word and customers realize essentially what they don't have and you do have, especially with the Microsoft partnership at the same time? Thanks.
Yeah, Dan, as I said in my prepared remarks, AI is a tailwind for us. And I mean, I take a simple approach: will we have more AI in the next year, 2 or 5 years? And for me, the answer is absolutely yes. And if that AI is being deployed with AI agents, you're going to need protection. You're going to need something like AIDR. You're going to need identity security. You're going to need browser security. You're going to need compliance around this. And that's the way we look at it. And again, we leverage the technologies that are out there. Why wouldn't we? And we have our own unique IP and our own model. So we get the best of both worlds. And there's many things that customers are looking for in these workflows and sort of data curation and knowledge in the security industry that you can't just get from a general LLM model. So I've talked about this before. There's a great opportunity to work together, and that's really what we're focused on.
Thanks.
Thank you. This concludes today's
Okay.
question and answer session.
All right. So thanks everyone for their time today. We appreciate your continued support and look forward to seeing you at our upcoming events. Thanks so much.
All right. Alrighty then. Hey, thank you. Appreciate you stopping in. Make sure you guys hit the like button on your way out. Appreciate you guys being here. Alrighty. I guess that's it. So, thanks for stopping in. Catch you guys later.